53, verse 4. Even though I walk through the valley of the shadow of death, I will fear no evil, for you are with me. Your rod and your staff, they comfort me. Matthew chapter 11, verses 28 to 30. Come to me, all who labor and are heavy laden, and I will give you rest. Take my yoke upon you, and learn from me, for I am gentle and lowly in heart, and you will find rest for your souls. For my yoke is easy, and my burden is light. Psalm chapter 119, verse 76. Let your steadfast love comfort me, according to your promise to your servant. Psalm chapter 73, verse 26. My flesh and my heart may fail, but God is the strength of my heart and my portion forever.
Sorry about that. Thank you for letting me know. Uh, yeah, so what I was saying is there's CPI this week. There is a lot of, chaos, obviously. But, you know, all these countries that Trump basically, like, wanted them to be fair, right? The ones that he put the tariffs on and whatever. Over 50 of them have already started trying to negotiate. Okay? So I don't believe this is going to be super long term, this drop. So, of course, if good things start to arise out of, these conversations and negotiations, again, this may be very short lived. And things will most likely rebound fairly quickly. You know, it just all depends. Because that uncertainty is there, you could see what's obviously been happening. Things things have been cracked in correlation and just running wild. You know, I've been telling everybody, obviously, that these are times where your risk needs to be very, very tight, very controlled, no over trading and over leveraging. Okay. I got to say that every time because, there's always people that want to do it on their own and think that they know it won't happen to them, even if it has already happened to them, and they go out and really blow their accounts for no reason. But yeah, so, just be very, very cautious. We're going to be just as patient as we always are. I'm going to be more demanding, as I generally am, around CPI, NFP, and whatever. Yesterday, me and my private group called out buys and sells and caught over 500 points in terms of how far the moves went. The one that ran up, right, the buy side delivery, and some of the entries that I showed that my students took, those ran up to 1,200 points. Like that's insane. Doesn't mean that obviously that's something you want to always try to nail down. That amount of volatility is not always going to be here. But man, it's pretty insane. Like, even in the chaos, we're still able to figure out what's going to take place, right? But again, there's CPI, FOMC tomorrow. Today, there's President Trump speaking, but there's no news, like before 6:30. So that's why we are going to allow 6:30 to come, see if we can identify some type of manipulation based on that, and then we'll figure out what to do from there. Bias and narrative has not changed. Overall, price rallied up for the Nasdaq. Okay, it ran up after it gapped lower, which I called before anybody else did, even ICT. Before he posted a video, I called it was most likely going to gap. And most people that I've seen that are talking about the markets also didn't identify this yearly order block, which we identified in my private community ahead of time, and I think on the Sunday call. But yeah, this 4-hour order block was tapped into. It raced to it. Bullish weekly order block as well. And you can see how that's triggered this retracement. It goes back to the conversation I've had about framing out or being able to anticipate when counter trend ideas would take place. If price is bearish, the opposing PD array or opposing liquidity pool, like sell side liquidity or whatever, many times is going to act as the catalyst for a retracement, right? So if you're a counter trend trader, maybe that's a framework you like to go off of. Wait for, if you see price being bearish, try to identify the opposing PD array, and then study how price behaves when it gets to those levels. And you could see it's already played out the way it should. The way that we anticipated it should. So now, if we take it from this high to that low, we basically came to optimal trade entry. All right, take it from that high to this low. Now you may be wondering why that high. Well, this was the first initial run, but which move actually started the run to the sell side here? Which fractal high? It's this one, right? So if you were measuring out from this high to that low, if you're an optimal trade entry trader, this is how you miss the opportunities. This is how you identify a range, and price doesn't want to fulfill it, because premium and discount, a lot of times, if you're looking for lower time frames or to move with price, a lot of times as price is moving, the overall range you're supposed to be identifying to see a opportunity within and get accurate measurements, it's moving, and it has to do with the most recent fractal high to most recent fractal low that started a retracement. And in this case, you could see that, that logic is accurate, because putting the anchor of the fib from the extreme high to the low, again, you miss it. But if you keep in mind that price moves in terms of the premium and discount range you're identifying, obviously you could see how that played out, right? And you get more close to price delivery, and things just become a little bit more accurate, right? So yeah. So we're hovering around equilibrium. You could see how equilibrium, has presented a back and forth movement. Notice how price went from this yearly order block, bounced away, blew through the new week opening gap. This is something that we were identifying before the fact. I said that it's most likely going to either not gap below, start a retracement, then go and take out these areas and hit the yearly order block, or it was going to gap below, then hit that, and then retrace for Monday's trading. And so we basically chose to do the gapping idea. Price gap below, and then price hit the yearly order block quickly. Yesterday ended up running against the sells because everybody's trying to short, right? And now we're hovering right where I mentioned earlier. So we could see this is a weekly wick. Also, if we zoom out, it's just a large wick here. I said I would not like to see price break too deeply into this after it came and swept this stuff out. It's not unreasonable for them to want to do what they've done. I would prefer, if we're going to stay extremely bearish, I'd prefer us to stay below this wick, because if it does that, right, say price continues to close below, that's going to show us that this is, a balanced price range. It's acting as a balanced price range. Why? Because it's an overlapping candle overlapped with a wick, right? A large wick. So both sides have been offered in there. So, it's not needed for them to come back. Clearly, they're trying to pull back on everybody, though, because the hysteria is unmatched. Excuse me. Right? So, those are some thoughts about that. We do have a fair value gap up here. We definitely want to not disregard that, right? So we definitely want to keep that in mind. This is the continuous chart, so let's actually move to the actual contract month chart. Just a reminder, if you guys get value from the content we provide, if you like these videos, definitely let your friends know. Invite them to come, join the conversation, and then don't forget to like the video, subscribe to the channel. It very much helps the channel out, and tells people that what we do here is worthwhile. So if you could do that for me, it's free, and I greatly appreciate it. And yeah, so thank you ahead of time for doing that. But yeah, I mentioned yesterday in my private community that this high here could potentially act as the weekly high. Obviously, that's assuming that we end up staying below these areas. So we'll see. Right? Of course, since there's no news, CPI is tomorrow, or FOMC is tomorrow, and then CPI is on Thursday. We got to keep in mind that we're ahead of a very insane news event. Okay, and given all the stuff that's taking place, it's gonna be even more crazy until it gets better, right? We're not done with the chaos. We're not done with the difficulty level being somewhat extreme for those that don't have like a strong familiarity for how price delivers in chaotic times. So again, just goes back to what I was saying earlier, what I continuously say. Make sure that you are not over trading and over leveraging. If you do, you're asking to lose. You're asking to deal with nonsense that you shouldn't have to deal with. Don't be stubborn and just listen to good advice. All right, so we got buy side here. This actually, so yeah, this is Friday's high, so we're gonna note that. So yeah, Friday's high is there. So again, all this run higher is, at least from what I see overall, this whole run higher is, potentially something that's just looking to set up price at a higher premium, and then potentially look to want to continue to drop. That's what I would ideally want to see, given the narrative, given overall what's been taking place. Of course, it's been extremely bearish. So the idea of them giving maybe this week, or turning this week into some type of bullish event, just to like pull back in a more grand scheme of things type of view, that just makes sense. Does that change the narrative on the higher time frame? Absolutely not. Any buys are just to set up a premium. So why is that important? Because you need to stick to a narrative. So if things are buying and you see a strong displacement lower still, you're not going to be thinking just because it's going higher that you can't trust shorts that have clearly been proven that they're in play. So sticking to the narrative, while allowing yourself to know that yes, there's going to be different biases at sometimes, right? Like bullishness in a downtrend or bearishness in an uptrend. It just helps you navigate properly, by separating bias and narrative, because you need to stick to your narrative. You don't want to be a flip-flopper, like regardless of what kind of trader you are. a scalper, swing trader, whatever. You want to be able to commit to one side, and if you want to be able to trade the other opposing sides, I've kind of talked about how to do that. Opposing PD arrays, act as a potential reversal area. If you see like an SMT, I think this was an SMT. We'll go check. Not really. I guess right here was. But it's kind of a... Let me see. Yeah, it's not really much of a reliable SMT idea. But nonetheless, it doesn't take away from the value in that concept. So finding SMT at opposing PD arrays, if like price is in a downtrend, say we're on a Monday also, because Monday generally goes against the narrative on the higher time frame. Put all that stuff together, SMT, opposing PD array, Monday, assuming the price is going to go lower. If you see that, like we did here with, minus the SMT, for the most part, you could reasonably anticipate the price is going to rally up, especially because it's been so bearish. And again, we hit a yearly bullish order block. So higher time frame, PD array, super bearish, Monday. So, likelihood of a retracement is pretty heavy. And you see how all that played out. We called that ahead of time, well ahead of time, before the fact on Sunday. And then I was talking about it yesterday in my private community. So all that's taking place here. I didn't really want to see price dig so deeply. I wanted to see it stay below this weekly wick I mentioned. I wanted to see it kind of dance inside this new week opening gap. And if we could have done that, we would have been able to determine like, okay, yeah, we are seriously going to continue being bearish. But now, because that didn't happen, we're just, we're looking at price now, seeing this as a retracement. It may have set the high the week yesterday. I wouldn't put it past them to try to do one more, try to blow that out one more time. But we'll see what happens. There's a reason we're waiting till 6:30, and we're not taking trades at 5:30, because timing is everything, right? Time and price, not price then time. Because you could find an opportunity to identify like a breaker or any other model to enter, and you could potentially make an argument that it's there in price. But just because you see a breaker, order block, or any other PD array in price at some random time doesn't mean that it's going to deliver at that time, because everything is ran on time, and it's not up for debate, right? You just go do some study and you could see like the timing is everything. Macros exist. Controversy that they don't is like totally ridiculous. Well, why do things decide to run during those 20-minute intervals on a regular basis, like 95% of the time? Something's there. If you don't want to call it a macro, so be it. But, timing is everything. And then the kill zones as well, the session, so coupling the frameworks we look to identify, higher time frame narrative and time, right, mixed with like PD arrays and the liquidity, you could see how there's like a beautiful picture that is in play. There's like a dance between time, price, and higher time frame to lower time frame, and certain liquidity pools. It's pretty fascinating, in all honesty. Especially since here we can do both sides. I have students that go against the narrative that I point out because they like to counter trend trade. And then I also have students that identify similar narrative. Maybe don't see the first framework or model that I present them with, but later on they catch a continuation variation of that same model in the same narrative. So it's, the level of independent thinking that's available to us is amazing with these concepts. But it's like a beautiful dance. And I hope that a lot of you guys that have spent time here so far have started to see a lot of the critical elements and how things mesh together. They don't have to be rocket science. And the stuff we do here is absolutely consistent, undeniable, because at this point, it's pretty incredible. And those that pay attention and put the effort in, to observe some of the things we do and talk about, along with ICT's concepts, which is obviously that's what this is rooted in. But the more time you spend here, hopefully you've been able to see the effectiveness, and the time has been helpful to you guys. I've been getting a lot of messages lately, so I appreciate you guys and the time you give me and attention, right? And again, I hope it continues to be of value to you. Right. So yeah, my assumption for what I want to see in a nutshell, right? Overnight, we have the open price. We have the weekly open price here. So price has now rallied up in a time when we're looking for reasons to short. Okay. There's no reason or logical argument for us to want to buy unless it's short-term in nature, which that we've been ahead of this and talked about this taking place. So this is not abnormal. It's not going against anything that we talked about. This whole run here was the move that we were a part of, This is an example of me taking a small short. I took a 40, 50 point move, shorting. Once price got down into here, price ended up accelerating, and then we called buys when the moment arose, right? Specifically, what ended up taking place, if I can go pull that up, for those that weren't here or didn't have, or aren't in my private community, we had price move down here. There was a 15-minute fair value gap below here. We called this as a target as well, right? So price staying below this, going into 6 o'clock. The short that I took was in here, live in front of my private community. And then I called 3 other shorts in here, aiming for these equal lows and this 15-minute fair value gap that's below here. Once price got down there and gave an accelerated move above this high, my personal line in the sand or trigger point that basically put me in alignment with price, or for my confidence for price to go higher versus continuing to press shorts, and just basically made me commit to buy side, along with my students committing to buy side, was the fact that price got above this particular area in here, and of course was just really ramping higher here. DXY was also supportive of this idea, and then of course one of my students named Niall, shout out, he ended up catching this and kind of pushed it a little more aggressive, which again, independent thinkers are what I'm creating. I'm not telling you have to follow all of the things that I do to be successful. I give you tools and perspectives on tools that ICT teaches, how I use them. I showcase experience, and then you do what you will with that information. And it's amazing to see how that perspective as a mentor, first of all, not many people have that perspective as a mentor. They want you to worship them. Oh, I got this specific model, and I'm the only, like the way that I do it only is the only way that you're supposed to do it. And it's just not the case. Luckily I'm versed with multiple models, so maybe that's kind of what is the separating factor and allows me to offer that to students. But yeah, one of my students caught this. He caught a move in here, waited also, took a little bit of partials. And then once I committed, because I waited for what I wanted to see to take place, which was this balanced price range in here being violated. Once I committed and said, hey, this is an entry, he also participated in that too. And one of my students as well, aside from my student Niall, he actually caught one down here and was really aggressive, and then rode the entire move above these highs. He has like a very small account. It's a decent size live account, but under 10K. But he was able to bag $560. If you do the math, that's a 10% gain off of things that we called live. He had a small account, and mind you, although I didn't do that here live, some of the students that were on yesterday are actually in the chat right now, and they'd be telling me I'm a liar if I wasn't being truthful and honest. Actually, one of the students that I was talking about that took this trade is here too. So, if he wants to pop out and say, yes, this is absolutely fact, he's free to do so. But yeah, and then of course, as a result of that analysis being correct, I personally didn't participate, and I don't think any of my other students were able to participate in this. I didn't anticipate it doing this, obviously, to be quite honest. We did have a line in the sand, draw on liquidity, which is this wick I mentioned, the weekly wick. And obviously it blew past it and then kind of just bounced around back and forth. See right there. What he says is true. No lies. See? We don't play games over here, yo. Yeah. Yeah, it was. It was amazing. That's the thing. Like, all the work that we do builds up. You know, for years, things build up. And, you know, we got to build our skill set enough so when the opportunities arise that are worth taking advantage of, or big opportunities like this, like high volatility, you know, we got to build things up in terms of our overall perspective and skill set so we're ready for those moments. Just like how people go to boot camp and, you know, they go train for war. You know, you got to train and build up to the point where, you know, maybe you're called to go serve your country, and you might have to fight and survive in battle. And that's what we do here. Every rep that you put in the market, although sometimes may seem monotonous and boring, and like you want to hurry up and get to the point, or you know, hurry up and start making money, all the work that you put in when no one's looking, those are the moments you're building yourself up. So you're ready for these types of opportunities. I can tell you one thing. Nobody could have taken advantage of this in my private community or myself. I wouldn't have been able to participate in any of this either if it wasn't for all the hard work that I've put in over the years. I called the down move live, and then it got down in here, so I called 4 shorts, and then I called 1 buy. So buys and sells. I started the morning yesterday thinking, okay, maybe since it's left this so aggressively, and DXY, I believe, was given a nice run higher, and then we had this decline, I started off assuming that, hey, we're going to drop. And then we were able to adjust, considering that it was Monday. Once it got up here, I was like, okay, the Monday manipulation is going to take place in the weekly range. And so all throughout that thought process, we were able to be comfortable navigating both sides. No over trading, no over leveraging. I personally only participated in 1 short that was 40 to 50 points. All right. My students caught larger amounts than me. But of course, I lead by example. If I take 1 trade and it's CPI or NFP or FOMC week, if I take down the minimums that I target, I'm not going to get in and take a trade again because I don't have to. And part of my rules are you got to be limited. You have 1 to 2 trades a day. If you make money and you smash the minimums, 1% or whatever you're trying to aim for, 20 to 30 points, you take that and get off. Because there's so many times that you'll see, and you've probably experienced, where you'll have a nice day, but you won't be satisfied with that 1 trade. You could have ended the day with that 1 trade that made you the minimum and reasonable amount, and you could have pushed greed to the side and came out profitable that day, but you just had to go back in because it's not enough. You're trying to change your life. You're trying to pass a funded account. You're trying to hurry up and speed the process up because you're being impatient, and mix that with a little bit of greed. So you chose to go in again, not satisfied with the minimums or the reasonable amount that you just got. And then guess what? It turns into a losing trading day. And then you start to doubt yourself. When you were correct initially and you should have just stopped, now since you took a loss, your whole entire trading career is now being questioned because you just simply didn't stop, and you start doubting things because of situations like that, as if anything has changed when you simply just made a bad decision. So you see what happens when certain small decisions are made that don't need to be made but end up in losing trades or end up in putting you in a bad position. These are things that are they're not the sexy things, because we want to be able to get sold this idea that I could take 500 trades and I'm going to make all this money and blah blah blah. Every moment in the trading day is a trading moment, right? I'm gonna just take a trade whenever. Like those perspectives screw you up. And it's the tiny decisions, like what I just talked about, that will be the deciding factor, whether you're a confident, successful, consistent trader, or you'll end up lacking confidence if you don't accept the reasonable things. You'll lack confidence and start doubting yourself when that's not even realistically like part of the equation. You just simply took a loss when you should have just held, so you made a mistake. You know what I mean? So, small decisions, small critiques a lot of times, from what I've learned from teaching students and just in my own personal journey, those small little decisions lead to very large issues, or they allow you to break the barrier from being inconsistent to consistent, right? Oh yeah, I forgot to post this up for legal reasons. Right, so of course, ain't financial advice. You do what you will with the information you're about to get provided here. It's educational, and yeah. So yeah, with that out of the way, let's get back to business. So yeah, we're about to hit the open. We have the bonds continuously rampaging to the downside. And then, of course, we have the yields really powerfully moving higher. I've been talking about, I think I talked about it on Sunday. And then, of course, I definitely talked about it yesterday with my private community. But overall, the economy in general, with the bonds dropping, that should be promoting continuous downside interest. So, again, not only is the higher time frame narrative bearish for the indices, we have the bonds dramatically showing that we're interested in going lower. So that's going to potentially drag things lower. It is dragging the currencies lower, at least the GBP lower, very aggressively. We've already seen the damage within the indices. I think this rally could be short-lived. Nothing really has changed overall. So we're going to continue to find justification for that until proven otherwise. Of course, I'm not going to be interested in trying to identify a short until we get some type of displacement. Maybe that will occur by breaking through this fair value gap in here. Maybe it fills the rest of this and gets back below it. But if it was to break through this, maybe sweep this high real quick, and then just, of course, displace down below and start trying to attack sell side again, that's when we'll be able to get back in line. If we move up in time frame, because if you get stuck on the lower time frame here, you're going to think that, oh, okay, things are bottoming out. First of all, we do not pick bottoms or tops. I don't care how you feel. And if you disagree with that, that's fine. To each his own, right? Everybody has their own opinion. But, from what I see in price and what I've learned throughout the last 5-6 years, you might as well allow for price to run and provide evidence that price is going to go in a specific direction on the higher time frame before you start trying to demand the opposing delivery to take place. In this case, it's been bearish, very dramatically. So instead of flip-flopping dramatically, in a fast-paced manner, because there's a retracement, we would have to demand price to get up into places like this, and just get up into these levels. And then start to consider potential buy side being targeted in a more meaningful capacity. The overall economy, things that are happening in the economy for the U.S. dollar, the thing like tariffs and bringing business back to the U.S., all that stuff is positive. And the fact that they're fighting inflation, they're trying their best, whatever. All that stuff is positive for the U.S. dollar, right? There's inflation that's being fought. Obviously, that is particularly negative for the U.S. dollar in some capacity, because when inflation happens, the dollar is excited. It goes crazy because the value's being inflated. So, again, we have to see what's going to take place. But overall, the things that are happening are positive for the dollar index. I mean, you can see, based on the relationship we talk about between the bonds and yields, this is, if we see any reason for the dollar to rally, sentiment-wise, given what's happening, the moves that are taking place, it's positive for the dollar. This rampaging to the buy side is positive for the dollar. And then this declining is bearish for the dollar. but bullish for but bearish for it's bullish for the DXY, but bearish overall for the currencies and the indices. Okay, so we got to keep that in mind. So if those scenarios play out and start to provide evidence that that relationship is intact, again, we're going to start seeing a lot of very reliable price delivery. Now, again, I talked about this as well because I've had questions because I'm very heavy in intermarket relationship analysis, and a lot of times if I see things that are not properly aligned, some people think that I take that as an opportunity to not trade. I very well could, and sometimes I do use that as a reason to just sit on the sideline and wait. Of course, I mix a couple other things, like where's price at, what's price delivering like, are we in consolidation, so on and so forth. What day is it, right? But that doesn't mean just because there's a crack in correlation that you don't take a trade, okay? Or that you have to doubt yourself technically because there's a crack in correlation. That's not the case, although we're heavily focused on trying to couple together and analyze the relationships that take place, because ICT himself has mentioned that's the first layer of identifying high probability is, are the markets symmetrical? Most people have missed that because it was in a Twitter space where he talked about it, but that's the first identifier. Okay, so that's why I spend so much time on this. And, I like to be able to put that into my decision making. And if I can't have it, so be it. I just drop my risk. Yeah, so gold is a safe haven. And also, the DXY is supposedly a safe haven. I know that doesn't make sense, but from the eyes of the world, apparently that's what it is. Given what we know, for the most part, the dollar is in jeopardy. Massive, massive jeopardy because of just the BRICS countries, the inflation, like massive overspending and printing of money, which devalues our dollar. The sanctions, the way we use sanctions, countries hate that. So that's why they're very quick to want to find an alternative. And then, of course, they hate America, a lot of countries, like their governments, not the people. But their governments would love nothing more than to see the United States fall so they could take over. It's one of China's goals, long-term, their 100-year plan, supposedly, is to dethrone the U.S. dollar and remove us from overall leadership in the world. So that's another reason why this stuff that's taking place in the U.S. economy is so important, and it's needed. It should have been done a long time ago, but for the safety, well-being, and longevity of the United States, being what it is, the things that are happening must take place. And politically, no one has wanted to do it because look at what people are doing to Trump, what they're saying about him, because he's trying to stop all this and fix what both sides have messed up over decades, generations. This is why no one's tried to do it, because of the backlash. That just, but he doesn't care because he's not going to run again, contrary to what a lot of lunatics are saying. But yeah, so aside from that, it's very important to keep in mind what is happening geopolitically, because that stuff influences what happens in the dollar. That influences what happens in the indices, and you can see that happening. You could see the importance of. Let me fix this real quick. Yeah, you can see the influence that geopolitics has. Tariffs and stuff, decisions made politically, has caused the market and overall global economy to go crazy. So that simple fact, if you were just looking at the markets that didn't know anything about politics, or the headlines at least, you wouldn't have the slightest idea what the hell's going on. Why are we so aggressively moving to the downside? Right? You'd be missing a piece to the puzzle. Doesn't mean you have to obsess over the intricate details, but you have to know what moves are being made and how that could potentially affect things. And I think we did a pretty decent job explaining in depth the overall landscape and why some of the things are important, how stuff is being affected, what it should mean for the economy, long term, short term. I talked about that on Sunday. So if you want to go dig into that, you can. But everything we've talked about has come to fruition so far. Okay, so we're looking for reasons to short. Obviously, prices pretty aggressively ran higher off the 1-year order block. The framework from that has beautifully delivered. It gapped lower as we assumed before anybody else said anything, including ICT himself. Right? We talked about it beforehand. Go check the timestamp. Let me see. Go to Safe Haven. Why has it pushed lower according to you? Well, it's pushed lower because there's a lot of manipulation also. You know what I mean? Everything's being manipulated on top of everything else. The cracks in correlation shows you that there is a lot of hidden hands making moves, and that's why this is such a risky time period, because the volatility is crazy, but then they're also using a crisis, supposed crisis, as a reason for them to make the markets do whatever the hell they want to cause the most pain, right? So that's the thing. When correlation and things are kind of messed up, you got to go off technicals, and you have to be demanding, very demanding, and very solid to your risk protocols, like I showcased by example, like I did yesterday. I could have taken three trades that were profitable in front of my private community. Instead, I just took one, and it was one of the more reasonable, 40 to 50 handle opportunities. When there was 3 opportunities that offered over 100 handles, and then one that offered over 1,100 handles, right? So, it's very important. You're gonna miss moves, you're gonna leave money on the table, and that's just the way it is. You can't get upset about it. There's always going to be a new trade. We're gonna find something today. I can't guarantee it, but there's a high probability that we'll find something that should work out. But he is saying that he will be present. Yeah, I mean, you got to remember, he's hilarious. And look what he does, all the things that he says. He has the media, Trump, he has the media in the palm of his hands. He knows how to pull their strings, make them literally lose their mind, and he can own the news cycle all the time just by saying hilarious stuff. He has to, think about it like this too. In order for him to run a third time, for that to be accepted, 2/3 of the country and Congress, and the whole government, more than half, have to agree. So I'm not entirely sure that will happen. 2/3 of the country isn't the support that he has. He has like a little bit over 50% support. So, I mean, just that alone, just that data alone shows you that he's just trying to mess with people, And, if they're trying to say a bunch of negative news and attack his agenda, what's the best way to stop them from doing that? Well, say you're going to run for a third term and make them think you're a dictator. So then that's what they'll talk about versus attacking your agenda. So it's very calculated. You could kind of understand don't take anything he says at face value. Realize that he's always negotiating. That's why he did the tariff thing, because he's going to now make them negotiate better deals because they're scared of him just letting it go and hurting those countries. And that's not the intention. It kind of is, but it's also more heavily leaned towards getting better deals for America, more fair deals, because we shouldn't be paying 90% tariffs on countries and get attacked because we're trying to put tariffs on those countries. It's not fair, So there's a reason why he's doing this stuff, and he's not going to be a third term president. It's not. It's not enough support. It'd be great if he could, because he's a strong leader. But that'd be a horrible precedent too. Just because of that, I wouldn't want that to happen, because then the other side would try to do the same thing. And the lawfare is a good example of how that stuff needs to not happen. Setting precedents that are totally ridiculous. But yeah, so we see that the Nasdaq is rallying. We've came into the open price. This is a 1 hour, so we got the high up here. We got relative equal lows down here. Again, we're in a bearish narrative. Bias is just running higher. It's giving a nice show of interest to go to the buy side. We have the DXY kind of staying inside of this level. I did mention that if the DXY is going to commit to buy side, and we're going to have something that is trustworthy for the DXY to continue to run an overall change to get to the buy side, it's going to have to get outside of the 3 PD arrays I mentioned, which is the monthly fair value gap high, the weekly order block, and preferably break this swing high here and get above this inversion fair value gap from a while ago, from way over here. I mean, I don't even think we need to use the one that was so far away. I think there's one that's more recent. Probably use this one. Probably use that one, yeah. So again, if it stays below that, remember there's a crack in correlation. A lot of the stuff is kind of messing things up overall in the United States, at least for now. The uncertainty is real. It's crazy, you know. So that's why things may be a little hectic. Okay. But again, if there's cracks in correlation, that doesn't mean anything. Doesn't mean you can't take a trade. It just tells you, because that's the first stage of high probability identification. If that's not in alignment, then it tells you time to lower your risk. You want to know when to trade, when not to trade, and when to have your risk at a particular level versus having it at a lower level. Well, this is one of those tools you could use. Are markets symmetrical? If you say no, they're not, and things aren't following risk on, risk off relationships, automatically, if you risk 1%, drop it to at least 1/4%, or 0.75%, so 0.75, you know, or 0.5%. Yeah, and then once things kick back in alignment, and you could see things are symmetrical, meaning that that's the first step of high probability, and you know, if you can identify narrative, then you can put it back, right? Because you don't. It's like, you know, knowing when to run into the battlefield, when and then when to wait and not run, right? If bullets are flying, you're not going to just run into the middle of the field with high risk, no bulletproof vest, not even having a weapon. You're just because you feel like running into the battlefield. You know, that's the same thing with trading. You're not just going to go in and have normal risk and gunsling at anything and everything just because you're on the chart. You know, you have to have things that has to be the right time. You know, and part of that has to do with what things that we mentioned. There is a nice 4-hour fair value gap. It might jump off of. You're talking about the one that's above us. I have that outlined right here. It's the 4-hour fair value gap. I pointed that out yesterday too, live. Whoops. So yeah, that's kind of what I'm looking for. The weekly high, I have assumed that it was this high, but we'll see if it wants to continue to leave that. Obviously, if it doesn't, it's all right, right? We'll figure out what to do with it. Just because price is running higher, I don't think I'm missing anything. You shouldn't either. Be very relaxed. Calm down. It's best to not even take a trade right at the open anyway. You know, like up to 6:50 AM Pacific Standard Time, because the manipulation could bleed off into the first like 20 minutes of the open price, right? So we got relative equal lows here. Let's see, I wouldn't be surprised if there was some kind of SMT at the lows. See, there was an SMT at the lows there. But again, I don't see this as a trustworthy run higher to totally disregard my idea to short. If anything, if this just rallies up into this level, takes out the highs here, maybe even sweeps out Friday's high, because that's, you know, potentially a target. If it ends up doing that, this may end up setting up the weekly high, and then this consolidation here may be setting up the buy side of a market maker sell model within that larger downside delivery assumption, right? It's consolidation, accumulation, maybe there's a second accumulation, and then maybe it runs the high here and then gives a strong displacement. So then on this 10-minute, we could be setting up a market maker sell model within that narrative and assumption that we're going to go lower on that higher time frame narrative perspective, right? Within, you know, this bias being bullish to retrace inside that particular time, right? So yeah, I hope that makes sense. Because again, all of that is working within the higher time frame narrative. Again, I wanted to give you guys another reminder. If you guys get value from the content and you like what we do, and you think there's other people that you think can add to the conversation or maybe learn some stuff from what we do here, definitely share the video, like and subscribe. It's obviously free, and that dramatically helps the channel out. It helps people know that this is a worthwhile community to engage with. And, of course, the more people we get in front of, the more people we can help. Because that's the point, right? I'm not here to blow smoke up anyone's ass. I'm not here to hype myself up. I'm here to lift you up, That's the whole point and purpose. Because, there's other things that I could be doing, Same with you guys, right? There's other people you could be dealing with, but you choose to deal with me. Sometimes, we talk about a lot of things that may not be the most motivating, but it is reality, and I do my best to serve you guys as best as I can. You guys help me with that by asking questions and stuff. But then, of course, you also can support the channel by just simply liking and subscribing to the channel and sharing with your friends, So, yeah. And, of course, if there's anything that you guys would like to see me do more of, I am always open to opinions, right, and advice for different ideas in terms of how to make the channel better and just to serve you guys better as the student. That helps me be a better mentor. Just like my private community, I talked to my private community yesterday, and I was telling them how they've helped me become a better mentor. They've kept me accountable, and then in turn, I've also been able to do the same for them. And then also the questions and things that you guys present to me helps me truly get into the mind of traders at all different levels, and it helps me see different perspectives too. And then it helps me figure out how to come up with solutions for you guys. And I don't know, it's just kind of like a two-way street. You know what I mean? Both here on YouTube and in my private community too, because it's a little bit more intimate and stuff like that. So yeah, if you guys could do that for me, it'd be much appreciated. And yeah, so we're going to stick to this bearish narrative overall. I'm not going to change my assumption just because prices rallied up. If anything, this is what I've been wanting to see. We started the week on Sunday assuming the price is going to run higher in some capacity. Didn't think it was going to go this aggressive, but it did. And now it's kind of fizzling out a little bit, but now we're giving a little bit more excitement. I wouldn't be surprised if they try one more time to pull people in. And then, well, actually, we see S&P there. Okay, so we may not, in the Nasdaq, see price come up and target that level. Okay, so I'm going to be on the side of that, actually. I'm going to be on the side of that. Because that's a beautiful observation there. The S&P that we see between the Dow. The Dow has not been able to get up into the levels that the S&P and the Nasdaq have, right? So they blew out those areas. We're still in a downtrend, and we've been anticipating this to go higher, to go lower. So I'm going to assume that this is probably going to very soon allow us to make an assumption as far as whether it's going to drop, whether we could trust the drop or not. But that's what I'm going to be supporting. I'm not going to buy here. I don't feel like buying unless I was going to target, some type of buy side up here. But that's all in the context of positioning to short. So I'm going to continue to justify that. I've seen so many people this morning talk about buys, like other people that I observe, and we'll see who's right. Right, we'll see who's right. Right, so yeah, we're coming off the heels of this running higher, possibly presenting the weekly high here. It swept liquidity, hit a higher time frame PD array, and that being the 4-hour fair value gap. So again, we'll see, right? I can tell you one thing, that if this, let's see how further up in time frame the fair value gap is. So we see this fair value gap here. I think that if we violate this, it could act as a balanced price range. Okay, because overlapping candles create balanced price ranges. So if we can get a huge run lower, return back into it, and it provides evidence that it doesn't want to get above that, that would solidify my assumption for this to be a market maker sell model. And I wouldn't be surprised if they give one more run higher, just to set up another distribution phase or another accumulation phase. Make this like maybe the second stage accumulation, first stage accumulation. Then maybe it does something like this. See, to then complete the market maker sell model. This is way too obvious down here. I wouldn't put it past anything in terms of them just not even trying to do that either. They can just maybe start delivering now because of the SMT. Maybe when we go into the macro, that's what will happen. I'm more on the side of this framework though. This is what I want to see. I'm interested in shorts in the coming hour. If we could see it. Excuse me. Yeah, I hope it makes sense why I'm looking for shorts. The price is rising, right? So what's everybody doing? Even though price has been extremely bearish. You know, everyone's thinking, oh my God, I'll probably put a bottom in. You know, like oh, I don't think it's gonna, I don't think it's gonna continue to go. We're gonna pick a bottom. There's nothing telling us that should be the case. Except, it's slightly becoming more positive when it comes to the tariffs because countries are coming to the negotiating table, but that's very premature. So we're waiting until the macro, or at least 5 minutes to the macro, right? We have a down candle here, rally up, so we should be able to respect the midpoint of that. If it does respect the midpoint of that and we get a displacement through this fair value gap, creating that balanced price range observation that I just mentioned, that could be our trigger to trust further downside delivery. And then maybe somewhere in here we can catch a continuation. If you wanted to get real aggressive, which I don't recommend because CPI and stuff like that is coming, you could study and consider identifying this because it's staying below the midpoint. There's a fair value gap in there. Maybe you can make the argument that that's a possible aggressive YouTube model short. But again, I still think there's a likelihood of us blowing the high out here one more time. And of course, we're going to go into the macro. And if this fails, it's going to show you the importance of the macro. How you can find an opportunity that looks like it's there, but because you didn't take it in a macro, the timing element screwed you over. In this case, right, that would be the case. If you took an entry here as a YouTube model using the fair value gap, the stop either has to be conservative and put all the way up here or right above the candle that creates the fair value gap. And if you put it there, using the second option, the candle that created the fair value gap, the high of it, you would have got stopped out, right? So again, this is a beautiful example of timing, the timing element, and why the macros are so important. Why I'm saying I would prefer to see price displace through this fair value gap, create a balanced price range and a stronger shift in market structure before I start to fully commit, because we're in a mode of retracement here inside of a trend that's going lower. So I want to see further evidence on top of the higher volatility environment we're inside of. I want to demand more from the market. I'm okay with letting this one go. But we'll see if we can have this delivery behind us, and then maybe we can see DXY give a displacement higher. Then we're going to start having even further evidence, right? Even more confirmation to be able to go off of. Where was that fair value gap? It's right there. Yeah, so yeah, we see how we tapped into the fair value gap there. So we'll see what happens. Yeah, as always, we're not in any rush. Is rebalanced and redelivery a PD array? I mean, it's a mode of delivery. It's a lot of times like a target, right? Price could redeliver. I would say there's 3 pillars to bias and narrative. Price is going to do one of 3 things. It's going to either attack some form of liquidity in terms of the liquidity list I give you guys here, and a more exhaustive list in my private community. Previous day's highs and lows, previous week's highs and lows, month's highs and lows, session highs and lows, so on and so forth. It's either going to do that, it's going to retrade to, rebalance, or create an imbalance, or attack some other form of a PD array, or it's going to consolidate. You know what I mean? So it's part of that equation. Redelivery and rebalancing, it's part of that equation. Okay? So it's not necessarily a PD array. I mean, you could classify that if you want to, if that makes more sense to you, because it can be used as a launching point or a target. So it's kind of what PD arrays set up in some cases. Right. So yeah, let's continue to see what happens as we go into this macro. Right, so yeah, we're gonna see what happens. Oh no. Yeah, hopefully everything's made sense so far, you guys. Let me know in the chat if anything hasn't made sense, if you kind of understand where I'm coming from, what I'm looking for. So one thing I do want to point out, if you had an assumption that, like, yes, you're bearish, just like me, maybe you agree. Oh, snap. Whoops. Maybe you agree entirely with what we've talked about this morning, but you, based on your own knowledge, your own experience, you were comfortable with potentially framing out maybe, some type of buy in here. Maybe this was logical to you because you thought price could reach up a little bit deeper. Maybe get deeper into this 4-hour fair value gap. Maybe that's something you were able to consider, and it made sense to you. If that's the case, don't let me take away from your independent thinking. There's no issue with you taking something like this. It is outside the macro. It's not something I personally want to take. But of course, you got to reason with yourself, and I can't force you into a mold, just like ICT says. So since I'm a mentor, right, and I teach people how to do things, I'm not going to take away from that, because then I'm taking away from you as the student. And I'm appreciative that I've gotten that opportunity to think independently, So I want to make sure that you can appreciate that as well, that you can also be afforded that independence, right? So yeah, this movement here, that's a beautiful delivery to the fair value gap, and a very, very nice reaction. If we can keep that up, and then of course, maybe break down this and overlap the fair value gap, this may end up being this may be the chance I've been looking for, or waiting for, that we've been waiting for, to try to participate. There may be an early aggressive entry in here for a short. I don't really see anything on that time frame. On the 15 second, we can see it. So maybe that is going to be something solid, right? This is a very early aggressive entry. You can see this consolidation in here inside this larger one, right? You can actually go in here on this 15-second chart and use this consolidation as a market maker sell model too, potentially, right? Accumulation, reaccumulation, possible smart money reversal in here. All of that's inside of the larger one, right? So inside each component of a market maker buy or sell model, there's also even smaller details related to market maker buy and sell models inside of the market maker, the overall higher time frame one that you're framing out, right? It's a very interesting piece of information that I was able to get a hold of early on. It served me extremely well over the last 5-6 years. I think it'll serve you well also. Right, so yeah, we see this happening. So I'm interested in finding a short. If we get below here, I'm going to use this breaker, use this overall delivery to the buy side down through the sell side as a balanced price range, as a bearish breaker, as long as we can obviously continue to see things continue to hold. But that's all I'm interested in right now. Of course, I said there's an aggressive entry you could have taken here. Now, if you would have taken that information and did whatever you wanted to, right? Maybe you thought, okay, yeah, let me just take that advice. There's the minimums offered there, 61 points off that perspective. Right, so let's see if that holds up overall. I'm personally not interested in taking anything. This is a decent little study though, because this is all you need. Maybe you caught that, secured the minimums, and got out. It's a good example of taking down the minimums would have allowed you to be profitable, but trying to hold for super long targets would have got you taken out, right? So yeah. But yeah, so let's continue to be patient, try to get. So why am I highlighting this breaker and not saying that I would take this entry here that I talked about? Well, I want to see a larger move. I want to be part of a bigger price swing. So how do I do that? How do I put myself in front of an opportunity like that? I have to frame it from a time frame above my entry time frames. Okay? So if I'm going to enter on the 15 second, 1 minute, I'm going to frame stuff on the 5, on the 15 minute, right? And then once that's able to present itself, then I'll be able to get in line with something much, much more meaningful. Right? So you can see how that entry in there on the 15-second chart, if you zoom out, right, this entry in here, it offered the move, right? That's undeniably a move that's tradable, that made sense, right? Shift in market structure, fair value gap, simply acquired 60 points. Remember, we're looking for 20 to 30. That offered you double of what I say is reasonable, what ICT says is a reasonable target, right? But if you look at this entry in here and then you zoom out to the 5 minute, look where we're at. We're kind of just dancing around. There's not really much of a framework to go off of that you could say, okay, this is a 5 minute larger time frame area that should respond, right? The thing that was pretty responsive was a 4-hour fair value gap, right? So you want to be able to pair up or layer your entries with a logical higher time frame framework. That way, when price delivers and you're entering on that lower time frame, you're not as concerned for price, not to deliver. Because generally, if you frame stuff like this, it will deliver. It will move fairly quickly. So yeah, overall, this has been a pretty decent run higher. We do have the consolidation. Price rallied up. I'm not sure if this is going to be the manipulation. Maybe this week ends in a bullish week. I talked about that on Sunday as a possibility. So like if we were to just blast off and kind of have no respect to sell side or no respect to the buy side liquidity, maybe it just continues to rampage and doesn't offer much. That's totally fine, right? Eventually, maybe tomorrow, if things don't take place and we go into Thursday, maybe that's something that we'll have to submit to. But again, my way of identifying bias and narrative specifically for the long term, like week to week, month to month basis, it does not change. I demand a ton of evidence to make an assumption that one side has overall changed. And that's not my opinion, right? That's what I've learned from ICT's videos when he talks about bias and narrative. He talks about it in a couple of them, both on YouTube and very heavily in the mentorship content he has. But then also, it's from what I've experienced myself. When price changes delivery, right? When does a higher time frame narrative end? How can I be sure? And that goes back to my 3 PDA rule, higher time frame PD arrays, right? And the structure related to that time frame, right? So if that isn't in play, right? If I don't see anything, like in this case, I need a higher time frame level to be violated up here in order for me to be really bullish. Otherwise, this is just, from my opinion, just a short-term retracement at a time when there's a lot of uncertainty in the market. The market rebounds most of the time. The U.S. economy ain't going nowhere. So it's not going to drop forever, right? But for now, until nothing has proven that it wants to give a continued longer-term buy. Doesn't mean you can't catch buys. We have basically framed out and talked about this running higher into the 4-hour fair value gap. It's just, for me personally, not something I've decided to want to engage. First of all, because I don't take entries outside my rules. 6:30, the open time, or when there's no news, I don't take entries before 6:30. because I don't take entries right at 6:30. I wait till the first macro. That eliminates the opportunity, even if I see a chance to get in, because my rules, So I miss a couple moves from time to time because of those specific guidelines. And then now we've went into the 650 macro. I pointed out one thing I wanted to see happen. Guess what? That didn't take place. So what did I do? I sat on my hands. I didn't take a trade. I did point out how there, could be a reasonable argument to have framed something going higher, right? To blow these highs out or dig one more time a little bit deeper into the 4-hour fair value gap. If that's something that aligns with what you're thinking, don't let me pull you away from that. That's not wrong. Okay? It's your opinion. It's what you thought, and it played out. Because what I wanted to see, which was seeing price give a displacement through this low so I could set up a short, because what I wanted to see didn't play out, I'm showing you by example that I have no issue saying, okay, I'm not going to take a trade. And I'm not, you see it. I'm not freaking out. I'm not stressed out. I'm not like, oh my God, I missed a move, like panicking. Okay. So it's the same thing that you want to emulate. You want to copy that type of level-headedness, and we all want to make money. Okay. Wanting to make money, like if that's the reason we have behind, I'm losing my mind because I missed a trade, right? Or, I should have held it longer, so I'm going to freak out. If making money is the main reason why, like you need to hurry up and make money, it's totally irrational, because you need to learn to trade well. And that's where the money will come, right? So yeah, I'm more than happy to let this go. Again, if any of you guys did decide that, hey, I want to take a buy in there, again, I'm not taking away from that. I would just prefer, for my own financial actions, to participate in something going to the downside, because my narrative is bearish. I've been waiting for this to go higher to then just try to press lower, because that's just part of my plan. That's my process. And I don't deviate from my plan. Here and there, maybe I'll break the rules and take a third trade because, I felt like it. But I know that if I take a loss, I'm not going to beat myself up because I know that I went against the rules. When you get more confident in your abilities, you're able to somewhat adjust things and, bend the rules a bit, I guess you could say. But when you're new and you're trying to learn and get these skill sets of discipline stuff, don't break the freaking rules, dude. like you're learning, trying to develop discipline. You can't develop discipline by being undisciplined because you feel like it, right? Just think about it. It makes no sense. And a lot of us will sit here and think, oh, I gotta get better at discipline. I gotta do this. I gotta do that. All while not even allowing yourself to practice being disciplined because you're just overly ambitious. I need to hurry up and make money, right? So again, it's irrational. It makes you totally silence and neglect the actual key elements that'll get you to your objectives, And in the moment, right? Like in the heat of the moment, it's hard to see through that fog that's created because it creates it's a weird fog that gets put up. A lot of us can't see some of the issues that are underlying because we're so focused on, I need to make money or I need to take an entry. Where's an order block? Hurry up, right? It's so much so that, we miss the things that actually help us, which is, the right mindset, having a proper plan, following your rules, and building discipline. Because just because you have a model and knowledge, and maybe you can call the market sometimes, even if you get to that level, if you can't manage risk, if you don't have money, how are you supposed to use that gift, right? So, and then if you don't have the technicals and the experience and understanding of how price operates, but you do have the risk management, how are you supposed to even apply the risk management if you can't even do the technical. See, so if you don't have one of those two things mastered, or both of them mastered, if one is missing, it's a problem. Again, that's why it takes time to learn this, aside from everything else that we talk about. So again, it's vitally important. Yes, technicals are important, but if you're missing out and neglecting risk because you just want to hurry up, again, it's if you're missing one of those two pillars in trading, mastering the technicals and all the things, learning how to get in, mixed with the risk management importance and strategic elements to that aspect of things, you end up having a hard time. And you could just learn both and be disciplined to operate within both of them. Discipline's needed for both. Right, but yeah, this has been a pretty decent run, right? Again, I'm still not convinced that, we'll see price not end up declining at some point. What I see here is just making me more excited for when we do see a drop, because now I have an argument to do this. Why am I even identifying this? Because we're in a higher time frame downtrend. It's a higher time frame downtrend. And if we can get a displacement lower, because I'm favoring shorts, we will be able to identify market maker sell model framework. And of course, this is also working inside this retracement to possibly go lower. We still have S&P, still hasn't been violated, still holding inside of this 4-hour fair value gap. So guess what? I haven't changed my narrative. I could have went in there and tossed a couple, like maybe a buy, just to continue to rampage higher once it failed here, right? I have nothing against potentially taking this, right? Get us up a little bit deeper into this, right? At the end of the day, I did have this as a potential area where price is going to reach to, right? And it's a previous liquidity pool. I think we have this huge gap in here too, so that's kind of interesting. That's something I did miss this morning, or didn't cross my mind. The gap up here is definitely something that we have to consider. So this gap up here, seems like that's what the cause has been for this rally. I didn't recognize that we had this gap there. So, see, we all make mistakes, right? Miss some stuff, and, we'll never be perfect. But yeah, since we can now see that, it's even more reasonable for us to want to see price at least attempt to get up there. That's, of course, in line with Friday's high. So, if it is to try to get up there, we'll see what happens. I prefer it to not do that, because obviously that would continue to support us being very weak, especially if it keeps this S&P intact. So far, it's up for debate, right? Let's see what the others are doing. We still have S&P at the highs. Not so much in the S&P. The S&P is definitely hitting a higher time frame PD array. So we'll see. There's a lot of we'll see, let's wait, right? Give some more information, at least on my end. But again, if you took a buy, and you're considering what I was talking about, but you did take a buy, here is one of your reasons you could put in your journal. There's a regular trading hours gap that's completely untapped, the upper portion. So that's where price, at least from what I see here, if the S&P fails, that's what it's reaching for. Of course, I missed that earlier, which is my mistake. I apologize for that. Because that now makes this a whole lot more logical as far as why it's potentially not going to decrease right here. Right? So, yeah. It's a regular trading hours gap from April, or what day was it? April 4th. So yeah, again, even if price comes up here, that's still not enough for me to think, okay, sells on the higher time frame have now stopped. Right? I need a lot more. I got to be that demanding. And then eventually when it kicks me into a scenario where I am like, okay, I'm 100% sure that now sales are done, maybe deals happen and other stuff in the world starts to promote some positivity, and then that translates in technicals, and then maybe we get back in correlation with stuff, then obviously that will present us with a very strong understanding that price is now switched. But there's nothing happening that's positive that promotes, okay, price is going to now make all-time highs or pull back another 1,000 points to the buy side because, this or that happened. Nothing has promoted that. We have very strong sell side here. It's kind of refused to take a lot of liquidity. It's swept out some, right? Like this one. This one did get swept. But for the most part, since these liquidity pools have been taken, it's just been layering liquidity. Layering, right? So if you were smart money and you wanted to short, pulling price up into this level, there's logical buyers up here. People are probably praying to God that it goes higher from here. So they got a buy stop above this high. But little do they know, on the higher time frame, we are literally in a huge downtrend. So this looks absolutely amazing if it gives us a decline. This is picture perfect for a short. Right? We'll see if that wants to come to fruition. That's what I prefer, and I'm going to stick to that personally. Again, I gotta make sure I remind you guys that if you did end up taking a buy, this regular trading hours gap is a beautiful thing to have considered to use as a reason why price pulled up the way that it has for the draw on liquidity. That coupled with this high up here, right? It's pretty strong argument, which of course I caught this late, so maybe you caught it earlier. But if not, it's a good thing that I didn't go in and try to force sells. I talked about one that I was trying to identify, but things that we wanted to see in price didn't play out. So what happened? We sat on our hands like a professional should, right? And we're all professionals here, right? We're not impulsive gamblers, right? So, yeah. So I'm curious to see what the reaction is going to be from here. We do have a regular trading hours gap down below. These regular trading hours gaps have been quite frankly insane. Another 400 plus regular trading hours gap. It's pretty wild. So yeah, let's see. I think it's going to disregard this S&T, so I want to see how that's going to behave. So if we can move up, try to see if we could get a little further context. So, okay, we can actually use this daily fair value gap. See, when you get to the daily chart, you still look and see nothing but bearishness. Bears are winning, supposedly, right? So, that's all my eye see. All my eye see is we took stops, we're returning to internal range liquidity, and we're most likely going to look to target external range liquidity again, because it's generally how things work. And we're in a downtrend. Nothing is positive about anything that's going on right now. It's a Tuesday, so Tuesday and Wednesday has a 70% chance of creating the high or low of the week. In this case, the high in a downtrend. So I'm very, very much behind the fact that we'll continue. And now we're just waiting. At least I am just waiting for evidence to be able to participate in something like that. I think, given what DXY is doing, things look like they are setting that up. Look at this. Does that not look absolutely beautiful for those of you that trade market maker buy and sell models? This is absolutely gorgeous in a downtrend on a day that could set the high of the week and manipulates a lot of times to set that up. You know, imagine, just think about it. If you trade market maker buy and sell models, if it does play out here, isn't that just absolutely beautiful? Not only did it leave these equal lows, but it's got a higher time frame narrative that looks clearly bearish. We've basically approached a higher time frame PD array, that being the daily fair value gap. So that could be the place where it wants to use as a smart money reversal, right? So you could start to converge things, start to layer stuff over on top of one another. And this stuff, it'll be a very, very confident delivery and engagement if we can get this to play out as we're talking about. That's what I'm waiting for. I'm waiting for the more meaningful moves. And in my opinion, that's what this is going to be. If we can get it to drop, right? So we'll see. What I can tell you is we have this huge wick too. So let's think about contingency, right? So we have this huge wick in here. Let's say DXY was to start to fall off the face of the earth and just start to tank, right? Let's say the DXY does that, right? This huge wick here overlapped with a fair value gap of some kind. We've been talking about balanced price ranges, okay? So if it does look like it wants to really ramp higher, comes back and can't even attempt to get down in here, and we just continue to move towards the buy side, that starts to build us a narrative that price may be changing, right? And then, of course, this is the 4 hour, so we have to have that agree on the daily chart for us to fully switch from one side to the other. And this analysis, because it's so high in time frame, you end up, if you can get ahead of it, you can end up having weeks of narrative and weeks of confidence in the particular direction you're trying to trade in. That's why this is so important. Yes, it takes a little bit of time and maybe kind of like agonizing, because it takes good amount of time. You know, there's no getting around that for things to play out, you know, using these time frames. But when you're able to and you get more comfortable with doing it, you sit with a steady hand and you're patient. You're not really worried about this, you know, you're doing one thing or another. But then when it kicks back in alignment, you are ready to strike. And when you do strike, you put the hammer on the market and it's beat it into submission, instead of you getting beat into submission on the 1 minute or seconds chart, trying to flip flop. You know what I mean? So yeah, some stuff to think about. Pretty much why I like the higher time frame. I'm grateful for those of you that have been hitting me up regularly, telling me that you apply most of the things we talk about, and you're seeing a lot of results. It's really inspiring and motivating for me as a mentor, someone out here trying to just share my knowledge. You know, I'll never claim that I'm the best, but I do have a good amount of knowledge, and the things that I've learned how to do, and then the way that I've learned how to communicate certain topics, it's actually helped others see things and build their own perspectives pretty solidly. So, you know, I'm grateful for you guys that do find value in what we do here. Again, just one more reminder, if you guys like the content we provide, if you think there's anyone that can get value from the conversation, maybe they can add to the conversation, definitely spread the word, share the video with anyone you think would take value from this type of stuff. And if you could do me a favor, if you haven't liked the video and subscribe to the channel if you're a regular viewer, definitely consider doing that. It's free and it supports the channel tremendously. So I can end up helping more people. And if you obviously add to the conversation, you're also part of that, value that's helping others. So yeah, if you could do that, it's much appreciated. So yeah, I'm just gonna continue to wait. Um, Whether it gives the drop to us or not, we're obviously just gonna have to wait and see. But I would much rather, at least from what I'm viewing, how I'm seeing things, I would much rather take the short and wait for the short to set up, because there's a very strong likelihood that this is going to take a nosedive. The problem is it may be waiting for CPI, right? So all this movement could just be trying to trick people in that are stuck on these lower time frames up until CPI, and then CPI will just dart to the downside, crushing any of the glimmer of hope that people have been building up, thinking that they picked a bottom for the last couple days, all in one full swoop on CPI that maybe runs like a couple hundred points in 5 seconds. It's something that we got to definitely consider. But yeah. So yeah, we will see how things play out. What the hell happened to my picture? Can you guys see me? Wait. What the hell just happened? Can y'all let me know if my camera is like showing? Just like it turned off. Can y'all do me a favor real quick? Can y'all see my... Is my camera working? It shows that it's on. It turned off? Are you freaking kidding me? Dude, what is happening now? Fuck. Alright, let me unplug it real quick. Give me a second, you guys. See. Oh, cool. Is it back? Can you guys see me now? Looks like you could see me on my screen. Is it working now? Yeah? Okay. What the fuck just happened, dude? It's always something, bro. Technology is amazing, but it's like, dude, come on, bro. I don't even know what the hell just happened. It's China. This thing came from China. They're turning me off. They're trying to silence me. Oh, man. Yeah, I'm very much at ease right now. I'm very peaceful, looking at an opportunity to strike for a powerful, dynamic short position. If you took a buy, well done, right? If you had a thought that you could take a buy, I could have very easily just said, yeah, let me just take a buy. I could have done that. I did call out, which move did I call out earlier? I think it was a short, right? It's like a little tiny short, 15-second chart. I think it was right here. It was this one. Obviously, that would have, not played out well if I would have held it. But again, these days, I don't even consider taking more than 20 to 30 points. Sometimes I do. Like yesterday, I bagged 40-ish, 45-ish points. Can't remember exactly. But yeah, see something real quick. Let's see if it shows. Yeah, I can show y'all real quick. It's right up in here. Yeah, on the 1 minute, that looks freaking, looks crazy. Here, let me zoom in a little bit. Oh wow, I actually got a little bit more. I got 51 points. Here, let me show y'all that real quick. See, so target was there. So it's like about 51-ish points. I'm right up in this fair value gap in here. Right, balanced price range, fair value gap, run on stops, shift in market structure, return back, and I took that, and that is all. That is at 6:30. So guess what? I went outside my rules on this one, right? But that was all pre-market trading. I was showing my private community pre-market trading, pre-market open, how price was declining, and then we watched price deliver from here, get above the balanced price range in here, presented us with the market maker buy model, similar to what we're looking for the market maker sell model. Oh wait, you guys can't see the. Oops! Oh my God. All right, 1 second. Sorry about that. All right, let's shrink it a little bit. Yeah, here. See, amp. All right, look how tiny that is. That move. It's so small. But guess what? That'll pay your bills. Okay? I'm not here to tell you that you have to make these huge 1,000-point runs. My students did better than me yesterday. You know, it's amazing. I love seeing it, you know. But guess what? I'm not here to have a competition, and neither should you be. You know, I don't care if I'm looked at as the trader that gets the largest trades. I could care less, because that opinion from other people is not what's going to pay my bills. It's not what's going to let me live the life that I want to live. You know, everyone's opinions are free. You know, everybody has opinions, and that's totally fine. But, you know, I am content with myself. I have nobody to impress, but I am out here trying to help students get to wherever they're trying to go, wherever that may be. You know, just play a small role in that. And I'm grateful that I've had the opportunity to teach such amazing people, and even just, you know, build friendships with people that I would have never had the opportunity to talk with, all because of trading, you know. So yeah, here we go. Let's see if things are finally going to kick back in alignment. We do have this regular trading hours gap. There is a risk of us getting up there. Let's see if we could change the state of delivery and break down through that low here. Again, I'm not 100%. I can never say guaranteed, but I am extremely interested right now in seeing how this is going to operate. So if we take this range here, let's measure how many standard deviations above price is gone. Now, if it goes 2 standard deviations, that's well within the power of 3 dynamics ICT teaches for consolidation, overnight, manipulation, distribution. Okay, so Asian range, central bank dealers range in here, the flout range, a lot of it's, you know, very, very close. Either way, if we use just the Asian range or the flout range, which I'll let you go dig into his videos and discover what that even means. It's too much to talk about here. But this is absolutely within the boundaries of Power 3. It's, you know, totally logical for them to want to do this and deliver the Power 3 from here. But it's also, you know, this Power 3 dynamic, accumulation, manipulation, distribution, can also, in many cases, overlap and be broken down by framing market maker buy and sell models. That's something that most people don't know, right? When was the last time you heard someone on YouTube say anything like that? I've not heard one person identify that, So that in itself is part of my model. Some elements that I don't really mention about my model. I mention a lot of components, because models are very personal. My private community is going to definitely get the entire amount once I'm done with the course I'm building for them. But yeah, this is a piece of logic you want to consider. So let's see if this plays out. If it runs too deeply through two of the overall projection tools that we have here. You can find this logic inside ICT's day trading section. Inside his 2016 mentorship. Obviously, it's not something that you want to fly through. You got to get used to learning how to do it. Got to be good at Power 3. If you want to incorporate what I just mentioned with market maker models overlapping, then you got to study that as well. But just let's see how this operates. If we get a displacement from here, I'm very confident that we'll see this turn into a market maker sell model. And then, of course, if we slide all the way through and then we break through this fair value gap, that is absolutely gorgeous because that can be acted as a balanced price range, can be used as an inversion fair value gap, and a second stage distribution overlapping confluence in terms of a downtrend. So that area here, if I miss anything in here, if I don't feel like taking trades in here, which I'm most likely not going to feel like it, maybe I'll throw one in here if it can look like it's going to do that. Right now, it's not enough yet. But if it does, there's a chance if it violates this. We've already taken out some buy-side liquidity. Have we tapped in? We came real close to that regular trading hours gap I mentioned from Friday. And if we can use that as the PD array to pair along with the 4-hour fair value gap midpoint, which is ironic. If we can use those things to pair our smart money reversal from, and our standard deviation projection from Power 3 dynamics, and a shift in market structure, and the market maker sell model idea, and a bullish DXY, and get down here to present a balanced price range, you can start to see just how powerful this move may end up being to continue to the downside. And the fact that we've retraced against the bearish trend, pulled in a lot of buy-side liquidity on a Tuesday, okay, right? I mean, the amount of confluence to support a sell-off, given the fact that the narrative is bearish, with what I just mentioned, should be overwhelming. There's nothing telling us long-term it's going to buy. Doesn't mean you couldn't catch these buys in here like I mentioned. But all of that, keeping in mind what I just mentioned, I've had this stuff in my mind the entire time. I just, dumping all of it without talking about some other stuff wouldn't make any sense. But with all this stuff in mind, that just further amplifies my interest to short, why it's more on the side of shorting than it is for me to take a buy. So let me ask you this. Does most, maybe not all, but does most of what I just mentioned make sense? I'll talk more about this. I'm going to talk more about this topic here in my private community, and I'll probably talk about it maybe on Sunday in some detail with you guys here on the YouTube channel. I know that I've gotten questions about this topic. Some students are at the day trading area in ICT's course. That's another beautiful thing about my private community. You go through content and you want to have someone there to help you, guide you through, who's been through it, who's studied it, who's applied it, like all these different concepts. And that's one of the things we offer in our private community. You go through stuff. I tell you to look at certain things, or you just look at certain things on your own, and you want to ask someone questions versus sitting there confused all day long every single day. That mentor that cares about your success, that's here to help you, is intimately here to help you when you're in the private community. And I do my best here on YouTube, obviously. I give you guys this really powerful insights and let you borrow this experience, which is what my private community has, like every single day almost. But yeah, you know, I've had people on YouTube that have done well by themselves. So, you know, certain people need that more intimate assistance. And because of my students, I offer a private community. You know, I never was going to have a private community or, you know, do anything like I do now. But it's because of the demand. It's because of students, right? The whole community is shaped by the students. Lessons I do is shaped by them, aside from the non-negotiables I talk about. So even on this YouTube channel, if you hit me with questions, you tell me what more you want to see, you know, things that will be more beneficial to you, whether it's how I run the live streams or what I choose to talk about, right? It's heavily catered towards what you need. And it's, you know, again, that's what my private community is, you know, the way it's organized. You know, like I made an adjustment to some of the structure in the community the other day because one of my favorite, or all the students are my favorite, but there's some that really, really, I mean, they just take it to the next level, you know. But one of my students named Maddie, he actually gave me some advice as far as how to organize things better so the review process is easier for those that want to review the things that I do and, you know, see what other students say as well. And I made an adjustment to how it's organized because of him. And that's pretty much, you know, very similar to how the whole community is set up. It's based on what they've told me would be helpful and beneficial to them, because the student helps the mentor become a better mentor. I have knowledge, you know, I could just shove all my own opinions down your throat if I wanted to, but I know that isn't necessarily what everybody needs. You know, everybody is different, and, you know, I operate the YouTube channel, all the content I provide, and especially my private community based on the students' needs. That itself is what separates what we do to everybody else that provides a supposed service that's really just a service to help you blow your account and be subservient to the person that's supposedly a mentor. You know, that's another difference too, right? So it's not normal. It's not like the traditional stuff you see on social media, traditional supposed mentors you see. It's heavily catered towards your success. You know, so for those of you that are interested in that, that's offered because of my students. And it's been amazing and highly effective, you know, with, you know, the students taking a pretty strong responsibility for that. And of course, you know, me as well, leading by example. I'm not perfect, and you're not perfect. And it's good to have that type of honesty. Ski said, I have a small account and I grow my account slowly. And today I was frustrated because I'm growing slowly. How can I deal with this frustration? Yeah, so that's one of those difficult things. I'm assuming that you're growing slowly and you're feeling unsatisfied, even if you make like, you know, say you have a $5,000 account or less, and you make like $50, you know, $20, $100. You look at that and think that's not life-changing. When in reality, you need to consider the fact that it is life-changing, because once you do grow that account, because you're in the situation where you have to grow it slowly and you don't have the funds, I'm assuming, to have a huge account, you have to realize that if you make 1% or 1 or 5 or however much percent that's positive, 99% of people, I think it's 99, I don't even think it's 95, 99% of people are blowing their accounts. So that's one good positive thing to take from, even if you have a small account and you're making small amounts, that's one thing you want to make sure you're drilling into your head. But then again, another perspective is, you know, even if you make 1% in a tiny account, that's still 1%, right? If you have 1% on a $5,000 account, that's $50. You know, if you make 1% on a $10,000 account, that's $500. Okay. If you make 1% on a $100K account, that's $5,000. Okay. So although it's kind of difficult to be satisfied with small gains on a small account, unfortunately, we have to just submit to the fact that that's just the reality. So us getting upset about that is irrational, because the amount of money in the account, contrary to what most believe, is vitally important. Unless you're over trading and over leveraging to try to make $100, $1,000, or $10,000, and that's not proper trading. That is where people's expectations get totally destroyed, and it causes traders to have this unrealistic rose petal colored glasses when they look at things, thinking that that's going to be the reality for them, when it's not. I don't even look at things like that. I used to, but it's just unnecessary because it's not realistic. It is somewhat realistic when you have the skill set and you have 5-10 years experience, and you're a very solid trader. You've proven it. You don't over risk, over leverage, or do any of that. You can end up being a little more risky, and then possibly having those types of opportunities to have explosive gains. That comes from a higher level of experience, though. And if you're able to follow your edge and make money slowly in a small account, you got to make sure you're practicing forcing yourself to be satisfied with that. Because just remember, someone blew their account, and hundreds of thousands of people blew their account today in this price delivery that we've been cautiously navigating, watching price do what we're saying it's potentially going to do. Going to levels we thought it's going to go to. Right? So if you're unsatisfied with making those small gains, that is an expectation problem, right? And if you guys go look at the trading plan development section, there's in my free community or in my private Discord, you see that that's the first and very starting place, the first topic that we look to talk about whenever students come to me for help, or when you are analyzing your skill set and your process. There's a reason it's the first thing. It's not the model, it's not bias, it's not narrative, it's not anything else. It's mindset, expectations, and psychological management. How are you going to manage your psychology? How do you feel about the small gains? How do you feel? Are you unsatisfied, which you kind of just admitted? Are you frustrated with how slow it's going? How are you going to work on that? And some of that has to do with adjusting your perspective to what I just mentioned. It may seem like it's there has to be more to it, and there's drills that you can do, but fixing that expectation has to do with you looking at social media and totally discounting every single thing that you see that sounds too good to be true, because it is. Especially looking at where specific students' skill levels at. If you have less than 3-4 years experience, it's entirely unrealistic. Just the first 2 years, a lot of times students have to use that time to grow into navigating the technicals itself. Just learning how to engage, how to take a trade, what's a broker, how do I use risk management. The first 2 years is generally stuck on that. It's a lot of wasted time. At least it feels that way. And then of course, once you get those foundations understood, that's why it's also so important to listen to the right people. Because I'm clearly not here to sell a false dream. This is hard. It takes time, especially if funds are hard to come by. Especially if you can't get $5,000 and put it into an account right away. But that's the thing. Even if you have the money, if the skill set's not there, if certain issues like not being satisfied with, minimums, right, taking down those minimums, and accurately being able to engage with the marketplace, if those things are not in order, it doesn't matter how much money you have. It doesn't matter how big the funded account is. And of course, the things that I'm saying here make people hop off, right? It'll make them disappear. It makes them think, oh, well, I'm not getting smoke blown on my ass, so let me just go look for so-and-so who, is showing me a bunch of demo profits, claiming it's real, and selling me the dream that I could turn $100 to $10,000. And it's unfortunate. You know what I mean? But again, it's so vitally important that you're aware of the bullshit, and it's not the fun stuff. It's fun to sit there and dream and think that we can turn $100 to $10,000. I personally, at the skill set I have, believe I could potentially do that. I have no interest in doing that because I'm so disciplined that I don't want to break my rules just to do some stuff like that. I don't, there's no turning $100 to 10,000 either. I mean, that's a little too much. Maybe 100 to 200 in like a couple days. That's 100% gain. And that's still over leveraging. There's not a lot size you can do unless you're in Forex that'll justify that. And if you're trading real funds, you need leverage. $100 gives you like no leverage unless you're trading Forex. And I don't trade Forex anymore. So, I say all that to say that, you have a small account, you're growing it slowly, which you should be proud of because most people aren't even taking that step. Okay. And today you got frustrated, which is it because you see it growing slowly or did you take a loss? And that's why you're frustrated. I can tell you this too. The more that you show up to something like this, knowing that I'm not here to blow smoke up your ass, knowing that I tell you the reality, whether it's uncomfortable or not, it's going to make you better over time, So, because you're limiting yourself with a person that was a victim to those types of mindsets and had to overcome that very same thing. It's not the fun stuff. That's the thing. Like, marketing is a double-edged sword. You know what I mean? Because it's great to market and pull people in. But then again, if the student is not wise enough or has enough experience, wise in terms of like the experience in the marketplace doing what it is that we do, we become victims very easily, victims to unrealistic expectations and things that are just harmful to us. So you say, it's because it's growing slowly, I haven't had a loss. That's good. That's something to be proud of versus getting frustrated. And I know that's coming from a place of like probably needing to change your circumstances fast. And trading from a place of lack is so difficult. I traded from that in the first 3 years, and it was treacherously hard. You know what I mean? It was absolutely hard. I had a failing relationship with my child's mother. COVID was happening in going into year 2. I had a job at that time, lost my job. Okay, I dealt with so many arrows being thrown at me as I was just trying to build my future with the skill set I found a passion for. And if I didn't get out of my own way and stop not being satisfied with these little wins that eventually led to large wins, leading to me getting a funded account, which led me to then being able to fund a personal account and then maintain those accounts and now get to where I'm at. If I didn't learn how to manage those things by using the advice that I'm sharing with you, I wouldn't be here. I would have quit like 99% of people I started trading with. Like 99% of people do, So I want you to think about what I've said and realize that you being frustrated about those small gains, knowing that you're doing well in terms of execution and performance, you're standing in your own way. You know what I mean? You're unwilling to celebrate the hard work that you've put in because things aren't moving financially fast enough. When that's, unfortunately, that's the situation you're in right now. And take that situation as a motivator, as a reason for you to have even more joy when you do get to where you're trying to go. Use that opportunity and being consistent to get a funded account. If you believe that you can manage risk properly, if you believe that, you're being able to trust yourself when it comes to what you're doing in the marketplace, use that to your advantage versus attacking yourself and not being satisfied. The inner conversation, that inner dialogue, that person in the mirror that we have to look at every single day, we got to turn that person into our best friend, our best coach. Because a lot of times traders, we're ambitious. We're super ambitious, more ambitious than most people in the world. You know what I mean? And if we don't allow ourselves to enjoy those small wins, how are we going to expect to get to those big wins if we weren't able to even accomplish and be happy about the small wins? You know? And this is a perspective that I had to be told from one of my mentors. You know what I mean? I have two mentors, right? I have one called Joe Miller, and I have another one that's obviously ICT himself. You know? And both of them together have turned me into the trader I am today, the person I am today. You know, so. And both those traders, Joe, I mean, he manages over $100 million. His mentorship is extremely pricey. It's like $4,000. Like, I put a lot of money into getting to where I'm at. And on top of that, regardless of the money I've lost, regardless of the money that I've had to invest in my education, regardless of the time I've had to place, I still make sure that I'm not in that category of overcharging people when it's not even overcharging, because I know how it was when I first started. I wish that someone would just give me a hand, and that's why I do these live calls. This is right here short, in my opinion, just to throw that out there. Sorry, I was kind of distracted. Just this stuff is so important. It's more important than trying to get into an entry. But yeah. So I hope you're able to take this to heart. I know it's kind of difficult to hear this type of stuff and have it leave a mark or make an impact. Just know that I was in that situation. And there's a lot of people in my private community that were there with me, that saw what I was saying, that saw me going through the stuff that I've been through and overcome it, and how I overcame it. Yet a lot of them still quit, knowing that I had many more reasons to quit than they did. You know, it was all perspective. It was all, do I really want to do this or not? And am I willing to change the way I view small wins? Right? Am I willing to change the perspective I was having to make it more positive and helpful, and be my best coach for myself? Because when you push the button, you're the only one in there. Nobody else is there. You know, there's groups and, you know, people that talk about trading that we listen to and all that type of stuff. But at the end of the day, because the person that takes the trades is us, like, we are the one pushing the button and managing the trade, because that's the case, we have no choice but to make ourselves, we got to be best friends with ourselves and really, really remove the negativity that, you know, we all could be plagued with. Because by default, negativity comes into the human mind because we are programmed to spot the threats naturally. Because in caveman times, that's all we had to worry about, you know, was the threat, all right? So by default in trading, that idea or thought process is focused on, right? Rather than the positivity. So we have to try hard and intentionally to get the positivity out of circumstances. And in high risk environments, it's extremely hard to do that because we're going against our instincts, trying to seek comfort, you know? So yeah, very important stuff that most people don't talk about, you know, so, but it's vitally important. And I hope that you take this stuff to heart. You know, it's not getting an entry here or there, right? But it's those things that you're going to have in your mind when you do get to that level and you're trying to, you know, accomplish these things and manage yourself at those higher levels. And you got to deal with this stuff now so you don't carry it on later. Because the worst thing you could do is get to where you're trying to go and have these same issues. Because it'll never be satisfying. And you'll never feel like you accomplished something. Even when you did. You know. You're welcome, bro. So that short that I just pointed out ran through the minimums beautifully. And that's all I'm looking for, really. So what did it run? It ran. It's gonna present us with that huge market maker sell model, I believe. But yeah, I took 2 pretty minor entries. I know it's gonna go large. I have a strong feeling we're gonna have a deep run, right? But as I say, I lead by example. I'm not gonna sit here and claim that you're gonna be able to knock down hundreds of points, right? So took an entry here, right? Little baby order block. This move higher, the low, coupled that with that, secured from that entry up top to the low right here before it took this low out. That was 20 points. And then I had another one there at the same time that ended up running 50. So in total, 70 points between 2 entries. Well, 1 entry, then another entry added on. So partial at the low here, 20 points, and then 50 points right here. I'm very, very confident it's going to run down below these lows. But again, CPI, my rules are my rules. FOMC, this and that, then my rules are my rules. I'm not here to overly impress, to show off. I don't care what anyone thinks. Okay? I can trade daily and find an opportunity, and I prove that. And that's all that matters. Everybody can keep their home runs. My brother just mentioned he got out at 40 points. Amazing, bro. I'm so grateful that you listen to the things I'm telling you. Because now guess what? You're going to come out more profitable than most people. And you're younger than everybody. Okay, so I wish I had the information that you have when I was younger. And for those of you that don't know, my little brother is on the call right now. It's a little family affair going on. It's another beautiful thing about this industry, this skill set. You can pass it on to people you care about. It's another reason why I grinded as hard as I could and still do. One, to be able to help him, obviously help others. And then, the main reason was to be able to teach this to my daughter and have time with my daughter whenever I want. Of course, that situation got real complicated because, her child's mom, but doesn't defeat the overall reason and goal behind why I go so hard. Why for the last, 4 years I've been waking up at 3 o'clock in the morning every day, 7 days a week, even when the market's closed. AM, by the way. So yeah, this right here, I'm looking at market maker sell model. My next idea, I'm probably going to switch to my Top Step account. That was my AMP Live. Back 70-ish points between two entries with 2 partials. But if we can get price to come down into this level, this is a first stage accumulation. Okay, so inside this, it should be able to offer some type of short idea. We'll see, right? This right here is a beautiful sell-off. Right, I mentioned it. Yet again, how many live calls is it at this point that I've called moves that run dramatically, where I've shown taking minimums and being satisfied? I mean, at some point, it's just like insane, right? And it's okay, Mark. I appreciate you saying that. But I mean, I say that and, kind of put out some vulnerabilities at times because I'm just a person like y'all, right? Like we all have our own problems. But the things that I say come from, like some stuff that I focus on and say that most people probably don't want to listen to, like in regards to risk and, reality and stuff like that. Those are the things that we will have to face at some point because we all have imperfect lives. Some of us go through more things than others. But everything is accomplishable. Have you heard ICT's story? I mean, his story is worse than mine, worse than most people that I've seen. You know, from his family life, his job, how he was, with no technology, how he was trying to do this. You know, his flaws, the things that he used to do, what he's had to overcome. If he was able to do it, me hearing his story made me feel like I'm able to do it. And I hope that both those stories and whoever else that has overcame some stuff that you've been able to be exposed to, I hope their stories also add to your ability to trust yourself. You know, that this can happen no matter how long it takes. You know, trading, I'll never retire. Okay? I'll be the 80-year-old still trading. I think Fritz sent me, Fritz in the chat, he's in my free community on Discord. You guys could join that too. I have a paid and a free community, by the way. So those of you that aren't in either of those can go look into that. Links in the description. But Fritz sent me something about this Chinese dude who's like 90 or 80 years old or something, and he's a trader. I'm like, that's gonna be me, bro. It's definitely gonna be me. I find enjoyment with this. I mean, it's just amazing. You know, it's the most fulfilling thing I've ever done, besides being a father. You know. Yeah, I agree wholeheartedly, Mark. But unfortunately, there's, you know, humans will be humans. Unfortunately. But that's the thing, like us as his students, we need to be able to represent properly. That's why I'm not out here being super over the top, like braggadocious when I could be, you know. I mean, look at what you see me do. All you gotta do is do the math, you know. I always show how many entries I take. When I do take an entry, I never overtrade. My private community sees that. I never overtrade, never over leverage. For the most part, like majority of the time, 70 to 80% of the time, we get into something that's profitable. You know, I've showed the percentage, right? I've shown it multiple times last year. I'm going to continue to show it multiple times this year. And I'm doing live calls. You could just do the math, right? I don't think there's been one call or, one live stream this year. Excuse me. No, I don't think there's been one live stream this year where a loss was taken. You know, there's been some that nothing was taken at all. There's been some ideas that didn't play out that I refused to take, but we monitored. In my private community, I think there's been 2 losses potentially. So gotta go look back, maybe 3. Again, I'm not perfect, right? But I say that to say that, you know, there's more wins than losses. You know, it's very reliable, the stuff that we do. And when things are conflicting, you know, the last week or so, I've been teaching you guys how to deal with that. But look at how amazing that was. I called over 1,100 points yesterday in my private community. I get up on here on this YouTube live stream, and I just called another 120 point move. But of course, I'm aiming for minimums. That's me personally. That's not telling you. I told you I'm confident this is going to go lower. That's me saying that I'm going to focus on minimums. I promote you doing the same, but maybe you know, trust what I'm saying, you know. Not that you're advised to do that, right? Take it and learn. I'm not a financial advisor, and this ain't financial advice. But, you know, for the most part, things play out. So if you decided to, you know, take your demo account, right, and enter here, when I said shorts are available, there was a beautiful delivery. But obviously, any entries or losses you take is your responsibility, wins or loss. I'm not responsible for your success unless it's education-based or financially, because it's solely your responsibility, and legally that has to be said. But, I mean, it's, you know, you could put 2 and 2 together, you know. But yeah, Ski, people do need to put more respect on his name. And us as his students, like I was saying, have to lead by example. You know, if we're out here trying to do the marketing the same way he is, I mean, it just continues to, there's a good and bad element to it. You know, marketing-wise, it's good. Stir up controversy because, well, there's smoke, there's fire. You know, some people like me, I'm not really interested in doing that, right? I'm going to call out dumb shit. That's for sure. But, you know, I'm not interested in fame or any of this nonsense. I'm interested in helping people. And I feel like I've been doing a decent job at that. And, you know, I'd like for the community to grow, because that means I'll be able to help more people. You know, that's the goal at the end of the day. But at the end of the day, I want to play my part in bettering the community as a whole, the trading community as a whole, show what's possible, not sugarcoat and be like everybody else. I also just I want people to come to my channel and be peaceful. You know, I don't want controversy all over the place. If it happens, it happens. You know, it is what it is. I'm a very good trader, so I don't care what nobody says. So if that offends people, so what? It is what it is. You know, everybody has opinions and feelings I'm not responsible for. So, you know, it is what it is. But yeah, just lead by example. People need to put respect on his name. And we should kind of lead in a positive way. I think that'll do a good service to, you know, helping other people put respect on his name. But some of them are learning and end up disrespecting him at the end. Yeah, there's no integrity in that. I wouldn't be able to sleep at night knowing I'm trying to be a fraud like that. Some people can. Some people are cool with it because, you know, they have no integrity. But, and they want to make a name for themselves and feel like they created some. I have created my own edge. The luxury that most people don't realize is you don't have to rename his stuff. You can build your own model with the tools he's given us. He set it up that way so we can go and do that. And he's mentioned it. You know, he's mentioned our success shouldn't be solely like poured onto him. Like, oh, you're the only reason why I became successful. No, he played a part, you know, just like I'm playing a small role in your guys' progress as well. But he's given us so many tools and so many different perspectives and ways of doing things that we're afforded the ability to go out and make something on our own, create our own model. The models that he's taught are not the only ones, you know, that are there, right? There's so many more. You can make a model using a volume imbalance. You can make a model using the midpoint of wicks. You can make a model using different time frames with those other PD arrays. You know, you can make a model using inverted breakers, right? Like that's a PD array too. Dude, most people don't know that. You know, you could make a model using the implied fair value gap, you know, right? Like there's so many ways that you can make new personalized models that aren't new, but that aren't being spoke about by him. And he's made that clear to those that are listening, you know, but most people aren't listening. They just like, I don't know. It's unfortunate. It really is. But then again, he doesn't really help stop the controversy because he likes the controversy because it's his marketing tactic, you know, so we can't really take anyone's disdain for him to heart, right? Because, you know, they're falling right into his trap. That's what he wants, because then people will watch his stuff and make videos about it, talk about him, and he doesn't have to spend $1 on marketing. That's the whole purpose as far as why he's so crazy. But the smart people like us, the ones here and the ones that actually pay attention to what he's teaching versus what he's saying to stir up controversy, we look past the man and we look to the concepts, you know, and people don't have to like him. He wants people to get stirred up because, again, it's marketing. And he's done a phenomenal job. Look at him. 3 years ago, he had 102 subscribers. Now he has almost 2 million in less than 3 years. That's literally insane, all because of controversy. You know? So there's a rhyme and reason behind why he's doing things. But again, you know, it would be nice if people wouldn't talk so much crap about it. But then again, he's invited it on purpose. But we know the truth. You know, so again, like I said earlier, the best way that we can move forward and, you know, show a different side of his concepts is by, you know, being different. You know, not being like everybody else. You know, I promote everybody, you know, especially all my private community students. You should take it into consideration to post videos on YouTube. Especially if eventually you build your own model, you're competent at what you do, and you feel you can help somebody, make videos. There's people that are on YouTube teaching concepts that ICT teaches that have no clue what the hell they're doing. So in order for us to drown that out, we can do our part in that case too. And it's hold you accountable. Me trading in front of people, at least for me, was the very best thing that I could have ever done to help me stay accountable. Because I'm just like everybody else. I have my own flaws. I had impulsive behaviors before I started placing rules and processes around those issues to stop them from happening. And then, of course, experience. But I feel like trading in front of people helps keep me accountable. And I'm helping people at the same time. So for me, that's how I view it. For some people, it's not going to be true. Because the pressure. I don't have pressure because I have nobody to impress. I could care less if someone doesn't like the fact that I made 30, 40 points each and every time I'm on a live call because they wanted me to get more. Price action went further. If that's how you feel, hold it for longer. Like that's great. I'm operating my business, you operate yours. So again, that perspective puts me in a place where I don't have any I have no need to be validated. I validate myself. My bank account validates me. My funded accounts and me helping other people validates me. Seeing them succeed. So there's other ways to be validated. For those that do struggle with that, I've some students have come to me feeling that way. And then, once I share this perspective with them, they stop thinking the way they were thinking. Because who are you really here to impress by trading and trying to demand more? Who is it that you need to impress? Are those same people going to pay your bills? Right? Like, is their opinion at all impactful in your life? And if people are hating, it's most of the time from a place of like jealousy. So at the end of the day, does it really matter? Not much, at least for me. So yeah, I definitely do recommend that those of you that do get to the point where you trust yourself, try, at least sharing like sped up markups and entries, or if you feel comfortable doing that. But then, of course, you don't have to. It's just a recommendation. It's just a thought. I promote everybody that comes to me, because students that come to me, especially in my private community, they know what they're doing. Okay? Like they become, it blows my mind. And even here, like I have students on YouTube that follow me for the last 3 years. The same thing takes place, It's just more intimate in the private community, and you're around more people that have been through the same thing that, it's like a family, and I like to keep it that way. But yeah, So looking at the chart here, I want to get back to the chart real quick. So look at what you see here. Isn't it just amazing, right? Like everything that we've talked about, aside from price maybe wanting to reject a little bit sooner and create this sell-off, everything took place. And what did we do? We were patient, waiting the whole time. No stress, not worried about it. You know what I mean? And it just beautifully delivered. Of course, this has happened to me for the last 3 weeks, given all the news events and stuff that's been taking place. In moves that start off, deliver my minimums, but then are just dramatic. Okay, running hundreds of points, and we're right at the start of them. Over and over and over and over and over again. Both here on YouTube and every day in my private community, 6 days a week. So again, I say that to really drive home the validity of what it is that we do here. You're in good hands. I'm not here to blow smoke up your ass like I've been saying all day. But it's undeniable when we see things playing out. And if, you get into an entry on your own, of your own opinion, right, of your own free will, preferably a demo account, right? Right. You can hold it, right? You can trust to hold it. And the reason why we could hold this, so why did this hold in here, right? Like, what could we look in here and dig into and identify as a reason price should have held in this? So yeah, once we get into this level, if I could find the YouTube model performing in here, I'm gonna take that and assume that maybe we're gonna try to dig down into this area. But what could we use up here that can help us trust that the short was gonna stay intact? Why did price stop here and not go a little deeper? Right? Well, if you look at this high, this low, right? Price ran up and swept this high, broke down, created a bearish breaker. So this breaker candle here, you drag that out, you can see how price respected it. So this is why I said there's a short that's going to show up, right? And then, of course, you can also use the argument that this breaker, high to low, this is a balanced price range. If it's going to be solidified as a breaker, the midpoint of that breaker pattern should not be violated. Did we stay above that? Yes. We see this large up candle here. Price declined through it, overlapped it, balanced price range, right? Another breaker, low, high, lower, low. So breaker inside of a breaker with a balanced price range, because that's what a breaker is at the end of the day, after all. So it held inside of the narrative we've been assuming all morning is going to stay bearish. Just see this as a retracement going higher to then set up the short. Right, so all that is the back end information as far as why we were aiming or identifying possible short ideas taking place. Okay, so that is the business with that. And it's been pretty amazing so far, right? We've got a fair value gap in here, order block. Let's see, is there... So yeah, we got this accumulation. It should not be able to break outside the midpoint of this accumulation. I don't think it's going to even attempt to get up there. DXY's, as we've been talking about, the stuff that's happening geopolitically and in the economic system is all being positive. I mentioned that this fair value gap, if we get below it, that'll create a balanced portion of the range right there. All this price action going higher, overlapping dramatically. This entire up move here may end up turning into a balanced price range on its own. Okay, if we could break this low, this whole upper portion up here becomes a balanced price range. Right? So price for the DXY has more areas up here to fill in. Still got bearishness in the currencies, GU specifically. Bonds are tanking, yields are rallying, supporting buy side DXY bearish indices, bearish foreign currencies. So now we're back in symmetrical markets. Ain't that something? All the stuff we talk about. It's unfolding right before your very eyes. Executions or areas where you could potentially find entries are presented to you. Mindsets talked about continuously to help you think properly about trading. So we provide a lot more than most and push a lot more above our weight in terms of skill set compared to following size, compared to others. At least that's my opinion. So I wish I had access like this to somebody when I was first starting. And I'm grateful for those of you that are with me, that stick with me, even though I have a small account. Because a lot of people, I'm sure, look at the account, the size. They come here. I'm not talking about taking an entry, and they just take that as justification to think, oh, there's probably nothing of importance here. But again, that's why It's extremely helpful if you like the video. Subscribe if you haven't already. I'm sure most of you guys are. Yeah, I want to keep mentioning that because I forget all the time when I'm watching videos I like. So it's a friendly reminder. But yeah, look at that beautiful market maker sell model playing out. I am absolutely in love with what I'm seeing here. It's just absolutely gorgeous. Equal lows, fair value gap. I'm targeting that. Fair value gap in here. It's going to break through it, create a balanced price range. I'm going to use that as an inversion fair value gap, and I'm going to use it to short. Not financial advice. And we got relative equal lows here and a fair value gap, right? Up candles here, being respected. Oh, why the hell did it do that? Up candles here, being respected. Broke down below, use that as a bearish breaker, fair value gap. We're now breaking through that balanced price range, getting into the second stage distribution. I feel like we have a pretty solid opportunity to catch price moving lower here from this area. I mean, yeah, to be honest, right, this has been happening all week. I have been getting a tad bit salty, seeing price move hundreds of handles, and I'm, catching my minimums. But hey, rules hurt sometimes. I'd rather be consistent than break my rules and then have a bad scenario take place eventually, because losses do come. But yeah, it's been pretty spectacular to know that we can navigate some of the most difficult conditions in the most insane like disruptions in the world, in the markets as well, accurately, and everything makes sense, and it's very consistent. It repeats over and over and over. I mean, it's definitely a very fun thing to be a part of. It's definitely something I greatly enjoy. So let's see how price wants to behave inside this fair value gap in here. Let's see. Let's watch and see what price wants to do. If price doesn't fully blow out these lows down here, or these deepest lows to fulfill the entire market maker sell model, I wouldn't be surprised if it just blows this out and maybe waits here. Maybe tomorrow it'll end up completing the overall, like full delivery. Let's see how this balanced price range operates. So we should be able to not see it do what it's doing here, but it is doing what it's doing. So let's see. Is it going to run the high here, then present a further decline? Right, taking out the stops here, then looking to break down. That's a pretty good thing, right? Because that would end up being a run on stops, which lets us know that all these people that were making money that rushed their stops here, they would be getting stopped out at that time. So if this is going to continue, now I'll tell you this, if this market maker sell model fails and we start getting way up in here, then sell side is going to be off the table, at least until it starts to prove otherwise. All right, so yeah, we got kind of an SMT here also at the fair value gap. So again, the higher time frame overall view very much justifies we're still going to be bearish. Also, if we break this low here, maybe well, you should not take any entries in here, right? At least for me, if you're going to take my advice. If I'm going to short again, I'm going to have to see price break down below here, create this as a bearish breaker inside the second stage distribution, and that will give me confidence to ride price down to the fair value gap, or down to here. Also, price running up above here, then breaking down right, below this, this should act as a balanced price range within this balanced price range. Why? Because it's a breaker. Breakers are balanced price ranges for the most part. Order blocks are too. So if I'm going to look to engage a short, it may not happen because CPI is tomorrow, or FOMC and then CPI. It may just get stuck now. But if it is going to happen, right, if it breaks through this, what allows me to trust the price isn't going to come back up there and I can still favor the breaker and balanced price range holding is because of the balanced price range rules and the breaker rules, and the fact that we're in a higher time frame narrative going lower, right? So if it was to get down there, the midpoint of that is my line in the sand. So where does my stop go? My stop goes right above that because it shouldn't come back, because this should act as a balanced price range if the idea I'm talking about here is going to unfold. And again, like I said, if this does not hold going lower and it was to get all the way up into here and keep testing some of this up here, that'd be an issue for me to want to engage shorts. I would have to wait, So yeah, I hope all that makes sense, everyone. Got this fair value gap in here. Remember, I'm assuming a balanced price range. If we can get back down below it, and then also it's a bearish breaker. So that sets up my interest to short. And this is a run on stops. Inside the second stage distribution, this should be a fast, low resistance run from this area, given what we've just talked about. Those are the conditions for fast-paced, amazing delivery when it comes to second stage distribution identification in a market maker sell model. So yeah, that's what we're going to be observing here. Check the chat. Right. Yeah, if you guys have any questions, just let me know. Otherwise, let's just continue to watch this magnificent overall delivery we've been able to watch and in some cases be a part of. So now this should act as a bearish breaker and a balanced price range. If we are going to commit to price fulfilling this market maker sell model, which is also in line with this bigger market maker sell model. This is the 15-second potential framework. And again, if this fails, it starts to push the interest timing-wise for shorts away until the news comes out. And it'll fail in many cases because it's in anticipation for the news event and the building sentiment for whatever the hell they're trying to do. Who knows what they're going to end up doing during those the news events coming out. So yeah, we should be able to get a fast move here if this is going to end up being a second stage distribution zone, like I mentioned. The longer we hang out, the less likely the volatility from that move or that specific piece of price action is. So the characteristics of an accurately identified market maker buy or sell model second stage distribution is fast movement. That's why ICT said that the one move or model that he would look to engage in, if he had to pick one of the concepts that he trades or teaches, that's the closest to the way he trades, it is the second stage distribution in a market maker buy or sell model. So yeah, we got this strong delivery away from the fair value gap here. Still left the fair value gap in here. So yeah, we'll see what happens. Pretty nice, pretty nice. It's a good sign right here. Of course, we're kind of outside of the macro, so I wouldn't be surprised if they were to kind of dance around and wait. I don't obviously want them to do that if this is going to be the second stage distribution. It's a second stage distribution on this 15-second. It's a second stage distribution overall, even from these little bit upper time frames here. So this is the entire framework here. So think about it. Entry inside this level over here, or participation inside the level over here. If this is going to drop, I mean, it's very reasonable to identify or to trust that it's going to go down here if this is going to deliver how we're assuming it should, right? Of course, there's variables for us today, as you know, it's been for like the past couple of weeks. The news events, the possibility of anything and everything happening, the economic data coming out from the United States, consumer, because that's what CPI stands for, Consumer Price Index. That stuff has a huge impact. NFP, FOMC, all these things just like layered on top of chaos. It's very, high risk. So even the stuff that's operating properly has to be looked at as, let me accept the minimums. Let me be content, And if I feel like I should hold it, this is what I should have been doing for the last couple of weeks. Just move it to break even or in profit. Like I tell my students to lock in 30, 20 or 30 if it's offered to you, and then just let it run. Practice doing that if you want to hold it longer. Or you can live inside the 20, 30 threshold. 20 or 30 point threshold. It's up to you. Either direction you go is reasonable, but you're your own individual, so you have to make those decisions. So yeah, look at that. That's a beautiful, beautiful balanced price range that was created in here. That delivery is amazing. Buy side candle overlap with the sell side candle inside of the 15-minute inversion fair value gap inside the second stage distribution. I mean, that is absolutely amazing. This is exactly what I'd want to see if we're going to continue going lower. So we'll see what happens. If all the things that are layered up, even though there's a news event taking place in the next couple of days, see if it can give us the delivery that I would like to see. Right? And again, if this all fails, if this now becomes an intermediate term high, right? This one too. Like this is the larger intermediate term high, right? Came into a fair value gap, lower high to the left, lower high to the right. This is the line in the sand for sells. If this gets violated up here, it becomes a problem because then it may look to want to run higher, right? Dig up a little deeper into this area. But if it stays intact, right? We have balanced price range here, return to the fair value gap, delivered away from it, so it's done work there and got below it. So we need to stay below that. Then we have this 15-minute fair value gap, right, which should be able to act as an inversion, right? If I can pull that up real quick, should be able to stay below the midpoint of this, ideally, right? Then these lows down here should be able to be targeted. And then, of course, if we can do that, if all that stuff can stay intact and really ram through the sell side here, that's the start of a second stage distribution to get us down to here. So we'll see. We'll see if it wants to be able to offer us that. again, we're ahead of the macro, which may be an issue. Because now we got this high here, right? These highs going into, or off the heels of price delivering over 100 plus handles already to the downside. Going in, we're in the lunch hour right now, right? So a lot of times, not every time, but a lot of times they like to run back against, take stops out, then go. We'd hopefully end up seeing just this been enough, and then have price drop, given the fact that we're inside this area. But again, timing is everything. So timing may be an issue. So let's just continue to see. Everything is still intact. Notice the balanced price range I talked about, both on the 15-minute and inside this little area. Notice how the midpoint is not even being traded to. It's leaving it open, right? We want to see that continue. Now, if it doesn't continue and it just violates these levels, we know for a fact the timing's not right for the move. And that's the reason why it would end. And maybe eventually, a little bit later, towards a macro, more close to a macro, maybe then it ends up delivering, right? So these are scenarios that happen all the time. They happen all the time. And that's why macros are so important. And you shouldn't listen to anyone that says that they're not in the market, right? You could simply go do your own due diligence and see that they are. So now we also have DXY kind of unwilling to continue going higher like it was earlier, which promoted the shorts. Of course, we're in the lunch hour. So that may instigate this to stall. Right, so that's what we see. We're pretty much seeing the stall out effect. So that's a part of timing. It's part of the fact that we've delivered pretty aggressively already. Who's to say that they don't leave these lows here for PM session, given the fact that it's already presented one pretty strong price leg to a pretty reasonable level, right? Who's to say that that's not something that can take place, that will take place? If the things that we've identified here are going to stay intact and this is going to be a good idea to short in here, again, this has to stay intact, right? So the issue that may arise is the timing, right? A lot of times that specific thing is the reason why your opportunity fails, is the timing element. Because if you see an order block or fair value gap or a breaker or whatever at a random point in time, this is why you don't just study to go identify the pattern. You got to study the context too. Because if you just see the pattern itself and there's no other elements like time and other things correlated with it, that's when they fail. Right? That's when they have a more likely chance of failure. Right? So, yeah. So, yeah, at least so far it seems, somewhat like it's still going to hold. Those of you that have been with me for a while, you know that I cannot stand being in entries that do this. That's why macros are the only times where I aim to take a trade. Earliest, I'll take it 5 minutes before, 5 minutes after the 20-minute interval. It's just because that's just the way it is. It helps you stay away from this. And then, of course, entering before the 6:30 open, when there's no news happening before 6:30, that also promotes this idea. Price not doing much. It's like we're being very manipulative. So yeah, those are times when that type of scenario takes place. I mean, you can kind of see that on full effect here, right? In terms of the timing being an issue. We pulled right into the lunch hour. ICT says the lunch hour, 9 o'clock, like 9 to 10, that's a no trade zone. So 8:30 to 9 AM Pacific Standard Time, lunchtime macro can unfold. And then, of course, the like from 10:30. You don't want to trade anytime before 10:30 in the PM session, and then you can do the same thing in a lot of the macros specific to the PM session. They're important. They're being spoke on for a reason, right? So you want to keep that in mind. But yeah, let's continue to watch how this wants to behave here. It's a very good experience to see how this is behaving. Now, if it was going to be a fast-paced move like I was talking about earlier, it would have already delivered from here. It started, but it said, nah, I'm good. Right? So yeah, let's see what happens. The only time I'd be interested in shorting, obviously, is waiting for the macro. And then, of course, I'd like to see a displacement like this. So let's see if this just dances around and doesn't fully break out of this level. And if it can get back down below here, it's still a pretty good sign. Remember, this is an intermediate term high here for this time frame. And the 1 minute. So if that breaks, ideally that's not what we'd like to see. It should be able to have a pretty fast-paced move. But yeah. So yeah, shorts right now, or any time since we got down into here, we were observing that, wanted to study and see how that was going to hold up. Didn't really offer much of a delivery there. Because it's out of the macro, it removes my ability to take that trade. So I talked about it. It could have been a possibility, but there's no entry there because guess what? We're outside the macro. And look what happened since we were outside the macro. It would have been a loss. So the rules that I tell you guys saves you from losing trades a lot. Okay? And it's from me losing trades that I'm able to talk about this stuff. But yeah. See, I'd have to have a pretty strong displacement back down towards the sell side if I was going to want to short again. We're now taking out this high. Took out that high, took out this high. So I personally would like to see us, again, get back down into this 15-minute fair value gap. If not, this here is the lunch hour macro, right? What does the lunch hour macro do? Generally, if price is delivering and we go into the 8:30 time up until the 9 o'clock time, generally there is a delivery to take out near-term liquidity, opposed to what was already taking place in the AM session, right? What's your thoughts on fundamental analysis? Are they needed? Because according to me, I have seen news respect price action more often than not. Well, see, fundamental analysis, I don't use headlines because when we get the headlines, things have already been priced into the market. You know what I mean? We're getting the idea late. That's why insider trading is so effective. That's why they're able to do what they do when, because they get the information before the public. So they know what's taking place. Sometimes things deliver before, and then news comes out and it goes against things, but then eventually goes in the direction that they're in line with. But then, a lot of times, it's late. It's late information. Like when you're comparing it to the market, the impact of it, it's just manipulation when things come out, right? Because things have already been priced into the market. Right, so following the news as a way to determine like where price is going to go, it's not that effective. Of course, according to you, if it works for you, then don't let me sway you away from it. But if you want my opinion on it, the news is just used for, in my opinion, a macro to figure out when volatility is going to come into play. And when it comes to fundamental analysis, my overall view is COT, seasonality, and interest rate analysis. That's my overall fundamental analysis. And then, of course, I look at earnings and quarterly adjustments from one contract to the next, 20, 40, 60-day look back. those are some of my other fundamental analysis concepts. But I don't look at the data when it comes to news. I don't personally think it helps, at least for me. But again, if that's something that you feel helps you, don't let me take you away from that opinion. I will not be a mentor person you're getting advice from that's going to force you to adopt my view on everything, because then I'm not doing my job. It's supposed to be independent. You're not supposed to be tethered to me forever. So I got to do my job with that in mind always, 100% of the time. So yeah, hope that answered your question. So yeah, let's see what happens when we're above this high. DXY is now finally finding legs to run higher again. This may very well just turn into a run on stops for the lunch hour macro, and then start to really decline again and finally complete this market maker sell model. I'm watching this swing low here. DXY I got my eyes on too. So again, we're back inside that assumed accumulation area. We don't want to dig way too deep into that, because then it starts to get a little suspect, right? So yeah, we may end up needing price to get through this accumulation, the second stage distribution area, and then return back into it to then provide us with the second stage distribution delivery. It seems like we overshot this one a little bit, but if we do see price end up declining aggressively from here, and it presents the price leg lower into the second stage distribution area, this could just be showing us pretty much a really lagged out, overshot, super volatile delivery utilizing this concept. And that happens at times, We're in a crazy world right now, right? So things shooting a little outside the lines is permissible. Yeah, I'm watching this low here. I want to see how price can deliver through that. At the same time, I want to see what DXY does in that same time. I still think, this is absolutely beautiful for a short. I'm still not convinced that we're going to end up being bullish and get back up here. I don't believe so. And if that's wrong, it is what it is, because news is coming out. So I'm going to stick to my convictions, to what I believe, until proven wrong. And we're not there yet. We're not there yet. So yeah, let's see how this behaves here. I still like the fact, notice how it came directly to the midpoint of that accumulation I have outlined. We just kind of rejected from it. We kind of filled in the rest of this. So we're approaching the macro before 9 a.m., 8:50. I don't like the fact that DXY is falling, so it's not. But then again, everything's been cracked in correlation, because everything that's happening has apparently on its face to the market, I guess, seems like it's going against any type of positive stuff for the market, for the economy, when it's extremely positive, all the stuff that's taking place for the U.S. This run on stops here is pretty nice. See if we can get a nice solid run back into this fair value gap. So that's pretty nice, pretty nice. Got this down movement, up movement, right? Took stops here, took stops there. Price has declined. It ran the stops here, so anyone winning in shorts has now been violated. Price is now retracing. So let's see if that can hold up. What's all three of them doing? So yeah, let's see how this area in here behaves. This looks pretty nice in here. And of course, the Dow has definitely hit the fair value gap, so that's a beautiful response away. But timing wise, we're a little late for the AM session. So, you know, it could just stall out. We have the news event coming tomorrow. So, I mean, I would not put it past them that they just try to hug price in this range. And then, given the fact that we're in a market maker sell model framework, clearly, in a downtrend, I wouldn't be surprised if they used that framework to get us down to here and beyond, maybe even all the way down to this fair value gap in here for CPI, or even just FOMC. Maybe FOMC does nothing. Maybe it goes completely against stuff, and then CPI comes in and just wrecks everybody. I'm not going to be trading CPI. I'll probably be live in my private community just to talk about it, but I'm not going to have any engagements for CPI. After what happened to me the other day, last week on Friday, where I tried to get in and I was about to click the button and my broker glitched because of the tariffs, the tariff announcements. It was on Sunday last week. I believe it was on Friday. But I tried to get in. I was about to click the button and I wouldn't have been able to put my stop. You know, and the response that took place against the move that I was trying to engage in and take minimums on, it was a buy to short. You know, I was buying to get us up to a logical area to sell off. It just did not allow it. It logged me out and kept me from getting into the trade, you know. But if I would have got in and my broker was glitching and I wouldn't have been able to put my stop on, we would have had some serious problems. I don't overtrade and over leverage, you know, in part because of that risk, especially on the weeks and days like this, or days like that when there's NFP, FOMC, news events, because the broker has a hard time filling orders when there's so much volatility, you know. So with that being a risk, I got to make sure that I'm protecting my account. You do too, right? So that's why you never over leverage and over risk, because that can happen to you. That's an outside risk that that has nothing to do with technicals. It has to do with tech. Okay, so it's just one of those things. Just one of those things. So yeah, we're back inside that balanced price range. I'm assuming that we should be able to hold from there and continue to deliver below the midpoint of that. It seems like right now, going into the 850 macro, there's the macro again, right? Here's an entry you could have taken if you waited. But yeah, you know, just gotta make sure you manage your risk properly. And I do think this is going to drop from here because it's delivered. I think that we're going to be able to collapse down to this area down here. I'd be pretty satisfied with taking exit at this low, maybe even below here. If I entered up here and got all the way down there, I'm already out. Just for context. Even this too, if this is a balanced price range, buy side offered, sell side offered, that's why this balanced price range in here also, aside from that, that's why this is also being respected. It doesn't have to come up here and leaves these as breakaway gaps. Because there's a lot of back end work happening. You know. Again, I appreciate you guys that have spent so much time with me this morning and always hop on. It means a lot to me. And, I'm super grateful that you find value in what I do. I do try my best. So thank you guys. Yeah, hopefully we can see this slide. We kind of stopped right there. I do feel like, yeah, there we go. Let's go. Grab my phone real quick. What a beautiful delivery. Hasn't today just been amazing? It's just amazing. And if it wasn't and you made a mistake, don't let it beat you up. Okay? Amazing. Let's see if it can. Did it already blow them out? No. Yeah, I think. Not entirely sure if we're going to be able to blow out even further. Not entirely sure. But because of the news coming out, I don't know if they'll want to leave it available. Not sure, but I mean, this looks like it's ready to go. It's not waiting for nobody. But who's to say that, they won't want to blow it out? So in this case, right, if you would have taken an entry in here or taken this entry in here and it's that close, ICT says that you most of the time want to not demand that your full target gets hit. Just take, like 10, 20 points away from your target and just accept it and get out with that. Okay? It's very, very helpful to have that mindset. So, yeah, because you just never know, Just never know. Yeah, the 850 macro has pretty beautifully delivered. So, yeah. Amazing. Let me ask, were any of you guys able to frame out something in there? Of course, I didn't put you in front of the market, so I'm not here to do that. I did say that if we could get some type of delivery below there, I was watching this low. I hope you got the hint for those of you that like signals. So I'm not a signal provider. If I send a signal to you, I'm basically taking your trade, and I'm not here to do that. I'm here to teach you how to do it on your own. We've laid out a lot of things, right? I talked about how this high getting taken, I was watching this low. Why would I be watching that low? And how price delivers through that low. And, why is this area down here important when I pointed it out? Why is the balanced price range important to understand? Why do I even talk about some of this stuff? It's literally to get you in front of, to lead you to the water, but you have to reach out and grab it using your own perspective, your own model. Because if I just teach you my model and you're just taking my trade because I say so all the time, how are you going to be able to trust yourself? You can get that same experience by just watching me call the market rather than, me throwing entries at you, turning you to a signal junkie. Again, that's not a popular thing, you know what I mean? And that's going to be probably a hindrance to a lot of people, coming and watching the content. And that's okay. It's fine. I know that those that stick around, like you guys, and those that are in both in my free community and my private community, you guys see what happens. Because there's a lot that's being handed to you on a platter. And, you have... Oh, snap. You have a lot of very good access you know, if there's someone that cares that you can reach out to, DMs that will respond, you know, but at the end of the day, you're going to have to do it on your own. And, you know, you can't learn to ride a bike if you have someone riding it for you all the time. You know what I mean? So it has to be a level of personal engagement, personal responsibility and accountability, and personal actions. Right? I'm sure you guys that take this serious, I'm sure you guys understand that. All right, so yeah, amazing. I hope you guys have learned a lot from this call. It's another call that, you know, we've been able to identify price going higher, what would turn off buys or sells depending on what we were looking at the time. I was favoring shorts pretty much the whole entire day, so I missed buys that presented themselves in a short-term capacity, obviously. We were putting out potential participation for the move right here that dropped. I did throw in a little entry in there, not gonna lie. Rode it all the way down to there, like I was annotating and talking to you guys about. There was buys in here to get up into this level. Wasn't sure if the regular trading hours gap would get fully traded too. You could see how it failed to hit it entirely. And then of course we got that rejection off. I was talking about some stuff to one of you guys, and as this was delivering, I did point that out. I broke down why this was what it was, why I jumped to that conclusion that shorts were going to take place from there. Then it just delivered all the way. And I showed you that I took minimums in here. And then, of course, I got over here and took some minimums in there as well. Well, how much was that one? That was 120 points, actually. It's not no minimums. Oops. What the hell does it look like that? Why is it tripping out like that? It keeps like shaping to my fucking screen, dude. Right here to here. Amp. So yeah. I don't know why the hell it was shaped. It was sticky on my screen. It was so weird. But yeah, so yeah. So I hope you guys got value from today. We're now way beyond the time that I normally like to stay on. I did want to see how this was going to deliver, so then you guys can see how the lunch hour macro from 8:30 to 9 pushes price up against the trend that was created in the AM session, right? And then as a result of that, a lot of times it pulls up and takes out a high that was created near that. My dog is losing his mind. Sorry about that. But then once it takes out that high, I said, let's watch this low. You know, the reason I said watch that low is when there's a shift through it, like here, like it was here, right? You can try to identify, if you trust the framework that I've painted for you guys all morning, which honestly, that's the one thing that I can't get you to do. You know, you have to make that decision to trust the things that you're learning. And I hope that by doing this enough, and you guys showing up all the time, I hope that you start to be able to do that and apply trust to it. And again, I'm always telling you guys, I'm not perfect. I will get it wrong. Okay, I'm not here to claim I'm perfect and claim that, you know, I'm like the best trader on the planet. I do enough, you know, just like how you're going to be able to do enough. Okay, but it's the teachings and way that this is ran is different than everybody else. And most of you guys that have been here for a while realize that, you know, and I'm grateful to see your guys' progress. And I'd like, you know, for more of you guys that do watch on a regular basis that don't really keep me updated with your progress, you know, DM me on Instagram, you know, shoot me like anything you feel like you want to talk about, you know, like your update me on where you're at, who you are, where you're from. You know, I like knowing who's watching me, because, you know, I look at this as a family, especially in my private community, but also here on YouTube, you know, because again, you guys could be anywhere, but you're watching me, so I greatly appreciate it, right? And so yeah, I think we've talked about a ton today. Again, if you guys have any questions about any specific element from today's video, maybe send me the timestamp or just tell me what the subject was that we talked about, and I can try to give you the best advice that I can. But yeah, I hope you guys got value. To my private community, we'll be live tomorrow, and for my YouTube family here on YouTube, we will be live again on Sunday to go over what took place, and, you know, see where price is going to go next. All right. But yeah, with that being said, you guys, God bless. Hope you got value from the video. Don't forget to like the video, share the video, and subscribe to the channel if you haven't already. It's free, and that supports the channel and helps other people see what it is we do here as a worthy endeavor. All right. But yeah, guys, I will talk to y'all on Sunday. Be safe.